Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hello everyone, welcome to Stocks Number Trading. My name is Ron, my partner is Dave. Thank you guys all for joining. It is 6 a.m. Eastern. It is Friday, September 29. Good Friday. Good morning to everyone. Juma Mubarak, welcome. Today we're going to go for 4 hours until 10 a.m. Eastern. And then hopefully you guys can go on with your Friday and enjoy the weekend coming up. So guys, I apologize for yesterday. I know it was a canceled session, but I wasn't feeling well. I had a really bad migraine the last 2 days, and I couldn't even function, so I just needed a day off. I set my alarm clock to get up yesterday, and as soon as I said I can't do it, so then I went right back to bed, and that helped a lot. So I have a blog on what we're gonna do today on if you're not feeling well. It's good to take a day off in trading it. I've been reviewing my journal for the past 15 years, and a lot of my losing days was when I was over trading, when I was not feeling well, when I was had migraines. So I'll talk a little bit about that. Staring at charts and screens and monitors and computers all day doesn't help, especially when you're at these computers for some of you guys are 6, 8, 10 hours a day. I don't know, but we'll talk all about it. And it's just I got some tips for you guys. I know some of you guys don't care. Some of you guys just trade and keep trading and don't look at your health or anything like that. But overall, it will impact your trading. So if you guys notice, maybe a lot of your losing days are those days where you're not feeling well. So I really want to you guys to understand the importance of that. When you recognize that you're sick or not feeling well, it's okay to take a day off. I do it. What we talk about, I preach what we do here. So I hope you guys can learn from it. If you guys don't, maybe in the future you will understand the importance of taking time off when you need it. Okay, your body needs it. And then you'll actually trade better when you're well rested and you feel much better. But that's how things go. This type of job it is staring at computers all day, and it's not that easy. So we'll talk a little bit about that, okay? But getting started, guys. Hope you guys had a good day trading the markets yesterday. Today is Friday, so it's the end of the week. It is post FOMC, so just please, guys, again, use proper risk management trading on a Friday. Whether there is or isn't any high impact news, still trade. It is a Friday. Remember, Fridays and Mondays are always those tricky days. Mondays are when they open the week. And Fridays are when they close them. So, and then also understand if you're going to hold any over weekend positions, and be prepared for how markets open Monday, and also utilize proper risk management. And if you've hit daily or weekly goals, you should be descaling and starting to get yourself out of these markets so that you can retain what you've made and keep it, and then go into the weekend, enjoy your weekend without thinking about losing money and things like that. And you can carry that confidence going into next week, and then you can continue this game of trading, which is called compounding. It's all about mathematics in trading. You want to compound your account, okay? Because the larger the capital you grow, that 0.51%, it starts really adding up in dollar figures. So some of you guys are trading with those higher $100, $200, $300,000 prop firm accounts, so you guys can really understand how 0.5% can really start to change your life, okay? So it's a game of mathematics. I hope you guys are learning all about that when we talk about 50% point of control of a candle and things like that. When you start to learn that point of control, 50% zone, patience, discipline, you can start to make some financial wealth for yourself for years to come, okay? Let's get started with the news today. Okay, so Friday, not much news. You can see it's a pretty light day in the markets, end of the week. We had some news coming out already from Europe at 2 a.m. pre-London. There was some German news. There was some British retail sales. Retail sales are up in UK from the forecast. Public sector net borrowing in the UK was out, 18 billion. A lot of borrowing over here. This is net borrowing. Japan, Bank of Japan had their press conference at 2:30 a.m. Eastern. All day there's Eurogroup meetings, and we have here, when we walk into our North American news at 8:30 a.m. Eastern, normally we have some US folders here. We just have two medium impact Canadian folders. We have Canadian core retail sales month over month, and we have just the regular retail sales. Remember, core, whenever you see that word core, it's got to exclude something. So this is, when we're looking at this, remember, it's excluding automobile sales. This one includes them, okay? And then later this afternoon, if you are trading going into power hour, the last hour of the trading day over here, 2:30 p.m., we've got FOMC member daily speaks, okay? That's our news. And then we have the weekend. I hope you guys enjoy your weekend. A reminder, guys, I will be going to Chicago tomorrow morning. I'm there for all weekend, and for the football game for the Dallas Cowboys versus Chicago Bears. So shout out to anybody who's from Chicago in our group. I'll be downtown. Maybe we can hit up for some deep dish Chicago style pizza. If you're there, message me in Discord. I'll hopefully link up with you guys. And so I'll have to cancel Monday morning session because my flight won't be coming in till Monday afternoon, and then we'll resume Tuesday morning. But I've got something for you guys here on our subscribes. We're 230 away from getting to that psychological 86,000. If somehow on today's call in our 4 hours, if we can get this to 86,000, which I don't think we can do, but that's why I'm trying to set the bar high. If this gets to 86,000 today, I'll come in for a Monday evening session, and it will be weekly forecast and higher time frame swing trade charts on the 4 hours for that week. But I don't think you guys can get it up there, okay? But we'll see. That's a goal, you know. If we get it, then we'll pay it back to you guys, okay? But so that's our news. Not much news today. Earnings, not much going on earnings. Normally Fridays are light on earnings. In the pre-market, we have Money Hero Limited, and after hours today, just one, Globus Maritime. I do not think any of these two securities are going to move the markets in any way, so I wouldn't pay too particular attention. What I would do over the weekend, guys, just heads up, go to Forex Factory on the weekend while you're drinking your coffee on a Saturday morning, Sunday morning. Go through the week, next week, start preparing your trading, your plan for next week. Like Monday, we can see we have some news. Tuesday, there's a lot of the flash services, flash manufacturing, all around the clock, all around the world. So you can see in France, Germany, Eurozone, we have UK, we have US. So a lot on Tuesday, high impact news. That's how you want to maybe set up a plan for how you're trading on Tuesday. Wednesday, again, we don't have too much news. Thursday, we do have our weekly unemployment claims. US has the final GDP quarter over quarter. That's big news over there. And then finishing off next week is right over here, core PCE and coming out of the US, okay? Today is also a quad witching day in the options market, so that will also disrupt volume today. So again, guys, please be careful trading today. Triple witching, quad witching. There's a lot of expiries happening today, monthly, weeklies, a lot going on today in the options market, and that does affect the stock market volume. And most of us are trading Dow Jones, Nasdaq, S&P 500, so you have to understand what that is too. Justin, what I'll do is over the weekend I'll do a blog on it and I'll upload it for you guys, okay? It just crossed my mind that it is happening, so I'll have a blog explaining in detail exactly what that is, okay, guys? Guys, that's why it's important to join up also for all of our free blogs, so that you can get this information, and it's great education to continue to learn. Today in the markets, some news. Trump gears up for high stakes call with China's Xi. Okay, so this is, I'm sure it's today or happening. So it's high stakes. Anytime these two gentlemen are talking, these are like two of the biggest nations in the world here. So I would pay particular attention to what comes out of this. Expectations are high for a shift in the trade standoff after Trump's unbeat remarks on TikTok and tariffs. So they will be talking about the TikTok platform, but also tariffs. I'm more I'm more interested in the tariff talk than TikTok. So I'm more interested. I'm a trader. I'm worried about these tariffs. TikTok is nice, but I don't use TikTok too much. So I want to know what's going on with the tariffs with these guys, because that impacts the markets, and that's what I want to know. Are they going up? Are they going down? Or are they trading sideways? Okay, so U.S. stock futures, that's what we're in right now. The futures tread water ahead of Trump's Xi call. What else? Did you guys see the big news on Intel yesterday? This was huge, huge news coming out of Intel. So you remember back a couple weeks ago, U.S. government got involved. Donald Trump took like a 10% stake in Intel. That caused the price to go up. And then look at how positive news starts following. So you're telling me that this stuff isn't like kind of pre-planned? I don't think so. I think it's just we got to catch these moves, guys, before they happen. This was big. Intel has a major problem that $5 billion from NVIDIA can't fix. So NVIDIA, guys, one of the largest corporations in the entire planet, invested $5 billion into NVIDIA. Like, it's kind of, that's a big stake to take. And yesterday they were up almost 23%. Okay, so big move. And NVIDIA also. Normally when you got someone like a company like this is doing the investing, they're normally down, and the company that they're investing in goes up. This was green on both sides. So NVIDIA was also up 3.5% to new all-time highs on this news. So unbelievable. NVIDIA is just one of those unicorn securities that just keeps me amazed every single day. This is like, it cannot be stopped right now. So that's a great security to add to your retirement plan, to your retirement portfolio. Don't always buy all-time highs. Don't buy the highest points, guys. It's just like trading, what we do every day. Look for those healthy pullbacks. If NVIDIA is one of the biggest companies in the world, worth over $4+ trillion, if they take, let's say, a 30% haircut, a 50% haircut, that is a security I would be looking to buy on discount. Right? There was an opportunity, if you guys remember last August, it dumped down to $92 a share, and since then has not looked back. It's already doubled its share value and share price. So that's how you can kind of think for investing in your future and things like that. Have like a top 5 of your investment securities, and always watch for discounts. It's just like shopping, guys. Same thing like shopping. If you can buy a nice pair of shoes, the ones that you've always wanted, and they're $200, and then 1 month from now they go on sale for 50% off, I'm sure you're going to go in and buy those shoes. Why are we not using that same type of psychology and mentality when it comes to investing for our future in the stock markets? Okay, so that was big. Look at, they're all over the place. NVIDIA explores $500 million investment in UK self-driving startup Wave. So like they're now an investment company as well. They have lots of free-flowing cash, and they can do things like this. Apple was doing this for many years, and now I'm watching NVIDIA do it. Okay, so Japan's stock fall on the Bank of Japan starts selling off its pile of ETFs. So if you're trading anything to do with the yen, the Bank of Japan had their meeting last night. FedEx stock jumps as profit rises, but tariffs dent outlook. Trump takes his war on media to unseen extremes. I believe I was just reading earlier, he got rid of, what's his name? Oh man, why is it not hitting me? Jimmy Kimmel. Jimmy Kimmel. So it kind of, I guess they booted out Jimmy Kimmel for some remarks he made. I didn't see what he talked about, but if he talked about Trump, that's unbelievable what's going on. Hopefully I don't get booted off YouTube for talking about Donald Trump. We don't want that to happen. Okay, so that's today's news. Lots going on, okay? And let's just continue moving forward, guys. Our Discord, shout outs to Big Dave yesterday. holding it down, sending out some great signals. There was one on DAX, so all of our European traders, there was signals sent out on DAX, always to look above this area, 23,368, right there, kind of closed above. It moved a little bit, retraced back down, but looking under here, the depth of market, you can see it's kind of building a higher low double bottom, came back up, one more time retested, and then the market came one more time, grab that last bit of liquidity without breaking the structure, holding it, continuing to drive above that area. And then we see the new higher high coming out of there, and then one more pullback. Again, it's diverging away from this area. I can see higher lows trending up, and then it finally started to break out. Okay, so that is DAX over there in the index, and also commodities, guys. Sell on gold, over 200 pips. So we're looking for sells below 3,669 area. You can see when it comes up, there was that big bearish candle pushing back down, and then you see how it kind of flagged a bearish flag all down in here, and then that one last, like now you can visually see what they do, that one last scoop up there of that liquidity, and then look at the next two bars, those bearish engulfing really answered it, and then one final attempt here, and then you get the resistance at that 669 area, and then there's where the redistribution of the volume broke down. So that is a frustrating area. I understand if we were trading this live and we were in sells, you see we would be in a sell, come back up, we would be back to like break even where we entered, then it would come back down, then go back up and back down, and then finally it starts to break down. So you just got to understand the structure. Higher time frame, it was pushing down. You got the resistance right there. We're still below it, and you got the volume closing below, but it just took us some time to develop. But that's how trading works, guys. It's not always just going to be a break, retest on the next candle and just go down. You got to understand sometimes trades take time to develop. It's not just 1, 2, 3 every single time, so they do take time. Okay, everyone on YouTube, thank you guys, over 200 viewers. We do appreciate you guys. If you guys can hit the like button, we want to get more and more traders on here that want to learn and earn with us on a daily basis, and it does help us out. So thank you guys. If you can hit the like, if you're getting value out of our channel, and you want us to be here every single day, we want to be here with you guys. Hit that like, subscribe to the channel, and we appreciate that. Here's one blog that I just put out there. I'm going to read this over with you guys. That's why I took the day off yesterday, is because of this. The importance of taking breaks. Time off can benefit your health and performance. I had a massive migraines the last 2 days. It kind of started that long session we did on FOMC. I was in front of the computer here for 8 hours with you guys live, and plus I was doing some other analysis after that. So it's just, my head was killing me. It wouldn't have been a good session because I wouldn't have been focused. So sometimes you got to take time off, and I'll explain that. Okay, and here's why you want to be part of this free Telegram channel, because you get all of our links when we go live on YouTube. Again, I'm going to start to do it different times now, so it will be all over the clock. You'll see some London sessions, you'll see some New York's, you'll see some Tokyo sessions, you'll see some weekly kind of swing trading classes where we'll come on and we won't be scalping the markets. We'll be on higher time frames, looking for bigger market moves on the higher time frames, more swing trading, and everything we do here at SST is all in here. Okay, Samuel, you also had those migraines same time, man. I can't function. I tell you guys, I can't function when I get them. I used to trade through them, and then I used to look at my profit loss report, and there were always, difficult days. I see that I was taking trades that I shouldn't have been because I was rushing them. I wasn't focused. It's just, so I have a track record. When I'm sick, when I'm not feeling well, I don't come into the markets. I'm very disciplined. I've learned discipline over the years, and that's why I want you guys to learn too. I want you guys to be traders for not just this week, not just today. I see some of you guys are already asking me, Ron, are we going to trade? Absolutely, we're going to trade, guys. We're going to trade. We're going to go to the charts. We're going to look for trades on every security. But I want you guys to understand it's not just about buying and selling. You can do that all day. If you're not feeling well, it doesn't matter if you find a trade setup. You'll probably lose, I'm telling you. And if you don't believe me, you will see over time, okay? I try to give you guys good, solid advice, but some of you guys do listen, and others, it just goes in one ear out the other ones, and you guys are just waiting for the next signal. That's not going to get you too far in trading. I'm dead honest. I know I'm going to lose some subs by saying these things, but I really don't care. If you unsubscribe when I'm trying to give you guys good advice, then go to another channel. It doesn't bother me. I want traders here that are willing to learn and want to trade for years to come, not just today. So it's very important to us at SST. That's what we stand by. We stand by education. We stand by giving good, solid advice from real traders. And we hope you guys are learning from that. You know, we're a different breed than other platforms and other trading groups. We're actually here with you guys every single day. You guys are with me more than I see my family. So, you know, you guys probably know over the years, I do take time. I do take a day off here and there. It's I'm a human. You do get burnt out. I'm not a robot, right? I like to think I'm a robot when I'm trading, but I'm actually a human. So you need to take time off, guys. This is our website. If you do want to join the team this weekend, this is the time so we can get started with you guys next week. Lots of education. Myself and Dave, courses, webinars, long-form boot camps, all those things are all in here, okay? The blog I want to go over right now is real quick, is this one, okay? So we had, guys, there was yesterday for the unemployment claims right there. You know, I wasn't with you guys, but you could have read the blog on unemployment claims and know what happened with the numbers yesterday. There was FOMC, so it was baked in about the 0.25% decrease. You saw how markets moved. So we'll see next one coming up in October. That's another one. We'll see if they do another rate cut in October. This one, the importance of taking breaks. Time off can benefit your health and performance. I know right now some of you guys are probably going to leave the channel because he's going to read a blog. That's fine with me, no problems. But I'm going to stick to what I do here. And I'm going to read this because there's a lot of us that suffer from migraines, especially trading staring at computers all day. I would recommend you guys get those glasses. They're only about $30 on Amazon. I got a pair of them. Those blue light glasses, they do help. They do help, guys. So this is the importance of taking breaks. Trading can be both exhilarating and exhausting. How many of us can attest to that? There's days where we're having a blast and there's other days that are really exhausting in the markets. Offering the potential for a substantial financial gain while demanding intense focus, quick decision making, and a deep understanding of the markets, okay? However, the fast-paced and high-pressure environment is not without its downsides. So I'm going to talk about the downsides of sitting at a computer and trading all day, especially if you guys are doing this 6, 8, 10 hours a day. One critical issue often overlooked by traders is the impact of physical and mental health on trading performance. Some of you guys are suffering from mental health, right? You know, it's that trading is not all about just technicals and fundamentals. I know, but this is the side that no one really wants to talk about. And this is the real side of trading, okay? You know, everyone will show you the glitz and the glamour and the lifestyle of trading, but no one really talks about the real shit about trading. So I'll be that person that will talk about the real stuff about trading. So right here, guys, we're all traders in this group, okay? So how many of you guys have suffered from being sick and sitting at the computer? I have a flu right now. I'm sweating right now. Like, I shouldn't even be here myself, but I didn't want to take 2 days off. I'm not feeling well today or yesterday. You know, I just know I'm sick right now. And so this blog will explore why it's essential for traders to take time off when necessary, particularly if suffering from illness or migraines, and offer tips on how to effectively manage health and navigating the markets. So why health matters in trading? For number one, cognitive functioning. Do we not use our brain when we're analyzing and we're trading? If our brain is not operating at its optimal potential, then how are we going to look? How are we going to be focused? Trading requires high intense focus more than any other style of job. You know, like if I was just working at a donut shop and I was making donuts, it doesn't require high intense focus. You know, it's just I can make a donut. This requires high intense. Like if you are a pilot, that's high intense, you know, like things like that. So cognitive functioning. When illness strikes, whether it's a common cold or something more chronic like migraines, cognitive functioning is one of the first things to suffer. Trading requires sharp analytical skills, the ability to process information rapidly. You know, if you're a scalper or you're doing things on the lower time frames, you can understand why you need your brain to process information quickly. And if your brain is not working, like if it's tired, lack of sleep, right? If you're tired, your brain is not going to be functioning. That might be a day you can consider to take a day off of trading, because I can guarantee you if your brain is not at 100%, you're going to probably make some mistakes and you're going to have a losing day in the market when that day you should have avoided. Right now, this is not where we are guessing. This is where you have to have now your long-term trading plan. You got to know these days when you're sick, you got to take a day off. Why? Because your brain is what helps you as a trader. If it's not working, you got to get rest. You got to relax and come back stronger, okay? And clarity in decision making, okay? You got to have when we're making high impact decisions, you got to have clarity. Poor health can significantly impair these faculties, leading to costly errors in the markets. And when we make errors, they're very costly. We can start to lose money. So number 2, emotional regulation. Trading is as much about managing emotions as it is about numbers. Illness and exhaustion can heighten emotional responses, making it challenging to cope with stress, avoid impulsive decisions, and maintain the discipline required to stick to your trading strategy. Long-term sustainability. Trading through illness or discomfort, such as screen-induced migraines. I get those a lot, guys. I don't know about you guys, but I'm just speaking for myself. I'm staring at a lot of white screens. Not just one monitor. I have 6 monitors that I'm looking at on 4, 6, 8 hours a day. So I get these, I've gotten them all my life, but now as I'm getting older, they're becoming really, really intense now. So I get them from time to time. You know, I went like 1 month stretch without getting them, and then just right after FOMC, those sessions really, really got to me. So is unsustainable in the long run. You might think you're invincible now. I know we all thought we were younger one day, but as you get older, you know, these are going to really, really start to, you know, catch up on you. So that's why I'm starting to say, guys, you know, trade, let your body's telling you something. If it's telling you it's okay to take a day off, the markets are open the next day, they'll be open next week. Don't get stressed out. Continuous strain can exacerbate health issues, leading to prolonged absences from the markets that could otherwise have been avoided with timely intervention. The risks of trading while unwell. Okay, guys, so pay attention to this. You know, some of you guys don't care, but others, you know, really care about this. I'm telling you guys, this will improve your trading. You'll start to see your profit and loss start to go up if you understand what this means here. Impaired judgment. Sickness can cloud judgment, increasing the likelihood of miscalculations and poor trades. Okay, you know, you might think that you're finding all these setups and things like that, but if you're not feeling well, you might make some miscalculations. Those days where you're very disciplined and you wait for candles close and you look for retests, these days where you have impaired judgment and you're sick and you have migraines, you're gonna rush things just to get into a trade to make some money quickly, end the session so you can go off. But those are those days that are going to destroy you as a trader. Increased stress. Attempting to trade while unwell can elevate stress levels, further aggravating both physical ailments and mental strain. Reduced productivity. Fighting through illness often results in reduced productivity and efficiency, defeating the purpose of attempting to work during those times. Here's a timeline of a migraine head attack. Okay, so some of you guys that do suffer from migraines, including myself, this is the stages. Like the first few hours to days is called what is a prodrome. This is irritability, depression, yawning, increased need to urinate, food cravings, sensitivity to light, sound, problems in concentrating, fatigue, muscle stiffness, difficulty in speaking and reading, nausea, difficulty in sleeping. How many of us can check mark 5 of these things off of here? I myself can. Then there's this next one called aura, okay? It's 5 to 60 minutes it lasts. Visual disturbances, temporary loss of sight, numbness and tingling on part of the body. Finally, this stage, the headache. This is where I had right after FOMC, like throbbing, drilling. I told you guys, it felt like there was like someone with a hammer inside my head and just hitting me with a hammer in my head. I told you guys that. That's how it felt that day. An ice pick in the head, burning, nausea, vomiting, insomnia, nasal congestion, anxiety, depressed mood, sensitivity to light, smell, sound, neck pain and stiffness. Sitting at a desk all day, you could probably get neck pain. That's why I told you guys posture is very important. When you're at your desk, sit up, posture, keep your neck up. All of these little things, you will appreciate them down the road. And then finally, the post-stroke over here, 24 to 48 hours, inability to concentrate. So think about trading. We need to concentrate when we're trading, while we're doing our analysis, while we're waiting patiently. It's hard to concentrate when you have all of these symptoms over here: fatigue, depressed mood, euphoric mood, and lack of comprehension. So that's coming from like a doctor's website about migraines. I didn't make this up. That's coming from professionals in that field. So I respect doctors, and I know my body, how it is when I'm trading under those situations. Finally, last thing are tips for managing health and trading. Listen to your body. Okay, listen to it, guys. Your body is your temple. It's telling you something. It's more important than looking at candlesticks all day. Your body gives you signals long before it reaches the breaking point. Like when we're trading, we set up signals and alerts. Your body signals long before it's reaching its breaking point. I knew I was getting a headache or a migraine prior to it happening. I knew that a couple days before. I could feel it. My body was telling me, and then I pushed it too much and overloaded the system, and I couldn't function the next day. Pay attention to symptoms of fatigue and migraines. If you notice signs of burnout or illness, take a step back and allow yourself time to recover. Guys, the markets are open every day, right? They're open every single day, literally every single day. Monday to Friday, stock markets, futures trading, Forex. If you even want to trade Saturday and Sunday, 7 days a week, crypto markets are open 24 hours a day. So literally there is 7 days a week, all day trading. You can even trade on Christmas morning. Bitcoin exchanges they trade, they don't stop. Okay, so I wouldn't suggest trading on Christmas. That's a day you want to take off, but guys, just keep that in the back of your mind. If you miss a day, don't get stressed out. I see a lot of you guys get stressed out. Like, oh my God, I missed one day, it's the end of the world. No, it's not. Just relax, guys. Most professional traders take one day off a week. Like some trade Monday to Thursday, and today they're not even in the markets. They're done. They're enjoying a long weekend. Other traders do a Monday, Tuesday. Wednesday is their midweek day to relax, review, not trade, get good sleep, and then they resume Thursday, Friday. You should have a weekly plan of your days, or some traders go 3 weeks on and take the fourth week off, right? You got to know it's a job, guys. This is a job. Trading is a job. If you go at your job, at your work, if you go 6-7 days a week and overtime, your body's going to get burnt out. You're gonna just fall apart. So trading is the same way. Don't overdo it. Make sure you give yourself a day break. Maybe go 3 weeks on, take a week off for review, relax, get your health back, and come back into the markets. That's how you should be doing this. If you're looking to be a trader for long term, if you're just looking to do this short term for a couple months and try it out, this maybe doesn't really even affect you. I'm talking to traders that really want to do this for multiple years down the road. You can learn from me. I have been doing trading for 20 plus years, and I've learned what works and what doesn't. And I know for a fact, 100%, when I'm sick and I have migraines, I lose money. That's how it is. I can show you guys my journaling from past years back, and to show you guys those days where I wrote down migraine sick. You can see my trades. They were all losses because I wasn't focused. So now I know. Establish a healthy routine. Guys, this is common sense. Regular breaks. Implement the Pomodoro technique. If you don't know what that is, look it up. Or regular intervals to rest your eyes and stretch your body. Screen management. Utilize the blue light filters, those blue light glasses I was talking about. You can buy them on Amazon for like $30. I know you look like you2 when you're wearing them. what's his name? The lead singer of U2. He wears them. It looks exactly like those. Okay, I might wear them on a stream one day. You guys are gonna say, Ron, you look silly. It doesn't matter. As long as I can help my migraines, I don't care how I look like on here. Bono, that's who it is. Yeah, we're gonna look like Bono with those glasses on. Utilize blue light filters on devices and ensure proper ambient lighting on your workspace to minimize eye strain. You don't have to get the glasses. There is screen protectors you can put on your monitor, and those are nice too, guys. They're really cheap, but they do help. Prioritize your sleep. Adequate sleep is crucial for maintaining cognitive function and emotional stability. Set a consistent sleep schedule to ensure you're well rested each day. Guys, I envy those people that sleep for 8 hours a day. I haven't slept an 8-hour day since I was maybe 15 years old. I only get 3-4 hours of sleep a day. I've been doing this all of my life. I can literally say that for like 30 years I've been only sleeping 3-4 hours a day. If I sleep any longer, my body just wakes me up and says, wow, like this is not normal, you know? So I try on a weekend to get a good healthy day's sleep, but I'm that person, 3-4 hours. That's how my dad is. I try to sleep longer. My body just can't. It's so used to 3-4 hours. I wish I could sleep like you guys, 6, 8, 10 hours a day. I can't. But if you guys can, prioritize your sleep, please. It's very, very important. Not a lot of people can function with 3-4 hours sleep every single day. It does take a toll on you, and it does add up. Exercise and nutrition, guys, please go get a gym membership. Exercise. I always tell everyone right after a good trading day, go to the gym. You know, a bad trading day, go to the gym. Take out your frustration on the weights. You're doing something positive for your body. Don't take it out by revenge trading, getting pissed off and doing some stupid things with your money. If you have a bad day in the markets, go to the gym, take out your frustration on the weights. At least you're doing something positive for your body. And also the flip side, if you had a great day trading the markets, you hit your daily goal, go again, reward yourself with a day at the gym. You know, it helps relieve stress. It's great. You're doing it for your body. It's very healthy. Okay. And then when you start going to the gym, you're going to start eating healthy. You're going to start eating better because you know how much hard work it is to take those calories off. If you're getting lazy and you're sitting at the computer and you're eating McDonald's all day, you're going to continue to eat more and more of that fast food because you're going to get lazy. And believe me, that if we put that type of fast food in our bodies every single day, it's gonna tear us down. So guys, these all things go hand in hand. Health and trading and training and everything. To go to the gym, you have to have a disciplinary plan when you go to the gym. So just like trading, everything affects each other. Yeah, pancakes, Joshua, once a week on Fridays. Today is a pancake cheat day. Okay. Mindfulness and stress reduction. Practice mindfulness techniques such as meditation or deep breathing exercises to help manage stress and maintain focus. Guys, this is great. Like meditate, breathing techniques while you're trading. You know, it helps. If you get into a trade, you're not gonna panic. You're not gonna stress out. Let the trade play out as long as you're using proper risk management. If you have to breathe, just relax. Okay. When you get in there, when you get into a trade, you should already have the outcome already made out. You should have your plan. You should know how much you're risking. If you get stopped out, you should know how much that is of your account. And also, if you hit TP, you should know what that should do too. You shouldn't be guessing while you're taking a trade, while you're in it. You should know exactly what the outcome will be. Okay. Know when to step away. Sometimes the best decision is to take a complete break from trading. Use this time to recuperate and return to the markets refreshed and rejuvenated. That's me. I had to take the day off yesterday. I apologize to you guys, but it was just my body saying, Ron, you need a day off. You're burnt out and you got to come back stronger. So that one day helped me, guys. So I appreciate it. I know some of you guys messaged me if I was okay, and yeah, it was just migraines. Plan for downtime, schedule regular breaks into your trading calendar, and establish contingency plans for unexpected downtime due to illness. Finally, in conclusion, while the world of trading is enticing, it is, prioritizing health is fundamental for achieving sustainable success. I know you guys want to be traders for years to come, so I'm trying to give you guys some good advice to continue to do this for years to come, is to take care of your body, take care of your mental health, Take signals from your body if you're getting sick to take some time off from the markets and come back when you're 100% healthy. Recognizing when to take a break can prevent harmful outcomes, increase productivity, and enhance overall performance in the long term. Remember, the market will always be there, okay? I can't stress this enough, but your health should always come first. Put your health before the market, guys. I'm telling you, listen from an old man like myself. I'm telling you, when I was younger, I thought I was invincible. In my 20s, I used to scalp the markets for 24 hours a day. I have proof of this. Like, I have video recordings of me trading for 24 hours a day, like a marathon, prior to even YouTube existing. Like, I didn't even know what social media was when I was doing this. I was in my younger years. I was in my grinding years. I had to do it. I just got married at that time. I had nothing else. I got laid off from the financial crisis, and I had to make money for the family. So I didn't have a choice. You guys might have a choice, but if you go in grind mode, I know some of you guys are in that grind mode that I was in, but I'm telling you guys how to do it the proper way. Take some time off, take some a break, right? Don't go 24 hours a day. It's not healthy. It's not good, right? That's probably why I can't sleep anymore at this age, is because how I over impacted my when I was younger. Thinking you're invincible and you're not. Now my body is basically breaking down at my age now. So by implementing these strategies and taking care of your well-being, you ensure a healthier, more focused approach to trading that can yield benefits far beyond the immediate gains of any single trade or transaction. Okay, so believe me on this. I'm preaching what I'm talking about here. So please, guys, if you can, take some time off and understand why I did this blog. I know it's got nothing to do with trading or a candlestick or anything like that, but this is very important, guys, for long-term sustainability in the markets, for yourself, your own health, and to keep you focused, okay? Guys, so let's get started. If you guys can hit the subscribe button. If we get this up to 86,000, I know we're 225 away, we'll come in and we'll do a bonus Monday swings trading session for higher outlooks on the weekly, on the monthly, and on the daily, and we'll look for 4-hour setups on securities. But I'm giving you guys, see if you guys can do it. I don't think it can happen today, but we'll see. Okay, let's go, guys. Welcome, good morning to everybody. So thanks for listening to that blog. Let me know, guys. Do you guys suffer from anything like that, or are you guys all good? Good morning, Nigel. Welcome. Justin, good morning. Red Clues, welcome. Hope you had a good time in Vienna. Thank you for joining, Clues. The thumbnail's what you needed. Yeah, it's a funny one. Do you guys remember that scene, the thumbnail from Wolf of Wall Street, when they're in that telephone booth and he calls his boss, he learns all about trading, and he's like, I quit. It's a pretty good one. Welcome, good morning, Forex Barks. Welcome, Brandon. Mike, good morning. Bilal, Jamal Mubarak, welcome, brother. Mikey, thank you for joining. Tammy, thank you, guys. Conrad, Samuel, welcome, guys. Danny, good morning. Oh, Tammy, you had a migraine and they last a minimum of 3 days. Yeah, I can attest to that. Okay, guys, let's get started. Let's get into it. And good morning to everyone on YouTube. Thank you guys for joining us today. We appreciate you guys. Welcome. It's me, John. Welcome. Lingesh, welcome. Thank you for joining. Zane, good morning. Appreciate you guys. Justin, thank you for joining again on YouTube as well. Volume Productions, welcome, guys. Red Clues, thank you for joining, bro. I appreciate you. Okay, so let's get started, guys. It is 6:40. So what I'm gonna do is a top-down analysis on gold, and then we'll see how everything is moving. If it's consolidating or it's moving, we'll trade it. If it's consolidating, maybe we'll do one more top-down on US30 or Nasdaq, but we'll do gold, Nasdaq, and US30 today. A reminder, I know you guys do know it is a Friday. Just use proper risk management. This is when you got to have a plan while you're trading. And make sure, guys, this is where you look at how you've been trading this entire week. It's the end of the week today. So are you at your weekly goal? Are you above your weekly goal? Or are you below your weekly goal? So we'll fit in all of us will fit in some sort of that category. We're either at our weekly goal, we're either above it and we're doing well this week, or we're below it and we had a tough week in the markets, okay? So we each individually have to come up with a plan for whichever category you're in. If you're above your weekly goal, you should be looking to maybe use smaller risk today so that you don't give everything back and then you retain your weekly goal and you can finish the markets today and enjoy your weekend and come back stronger. If you're at like a break even, you were up, you were down, and you're basically, well, let's try and maybe just keep it around a break even. Let's not do anything silly and go into severe drawdown on a Friday, because then that will impact the way how you go about your weekend and how you trade next week. And if you're already in drawdown, it's not a day where you want to go higher leverage to try and get out of that drawdown. When you dig yourself into a hole, you want to dig yourself out slowly. You don't want to make anything dramatic like increasing leverage and just going, you only live once and going for it. If you do that, some traders do it. Some do come out, escape out of that severe drawdown by going crazy like that. But others just make matters worse, and you're going to dig yourself in a deeper hole. So just please, guys, use proper risk management when you're trading for everything you do in these markets, okay? I already know how much I'm going to risk today on a Friday prior to even looking at a chart. I already know. Mentally, I know how much I'm going to do. It is quad witching too, Lindsay. Yeah, you're absolutely correct about that. So quad witching is where you have multiple expirations on options. You got leaps, you got monthlies, you got weeklies. You have a lot going on. I mentioned that early on in the call. I'll do a blog later today and I'll upload it before I leave to Chicago, and I'll get it for you guys explaining what is quad witching in the markets. Okay, so that might then, when you read that blog, then it might give you an understanding why on these days you should be taking it easy, okay? So let's start off with gold on the daily, okay? So this is the much higher time frames. We're not on the 5 minutes. We can see basically all summer right here. Look how much we've consolidated. If I was to trap this entire area on the daily and consider this to be a flag, it is a bullish flag. Here's your bullish rally. That's your pole. Here's your flag. And then here's the high probability. A bullish flag has a high probability, not 100% guaranteed, but it's got a high probability. It's accumulating. It's cooling itself off to redistribute the volume to the upside. And that's exactly what we can see here. And you can see how long it's been consolidating. It's been consolidating since mid-April. So you got all of April, May, June, July, August, and look at when they finally redistributed it, right at the beginning of September, okay? So that took multiple months of accumulation to release this volume, but look at gold to all-time highs. So it could have accumulated, sellers were accumulating here, 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 and here, but come September, if they closed it below, like if there was more sellers pushing it down, and let's say opposite happened, September we opened down here, it closed, retested this, we could have been having this conversation right now. Gold could have been dumping down back down to here, but global things happened around the world that saw accumulation on gold. When there's uncertainty, when there's wars, when there's all kinds of things going on around the world, gold is a safe haven and it's a precious metal. US dollar, I do like the US dollar, but it is a fiat currency. Fiat currency all over the world is a piece of paper. I have pieces of paper in Canada. US has pieces of paper. Germany has pieces of paper. Japan has pieces of paper. Wherever you go around the world, fiat currency is just a piece of paper, right? And it can be printed at will, and that's what causes inflation. Gold is a different security, it's a precious metal, so it operates differently. So let's just talk about this previous all-time high, 3,500, where we did hit it back in April. So you can see how it's now, there was a previous all-time high, and now we had that body close above, and now it's made this previous all-time high, 3,500, nice psychological area, as a supporting level. So what I do is, we're trading up here now, but if it ever does come back down there, I'd like to make this a daily point of interest, so I change it to a yellow line. And what I could also do is get in the habit, guys, if you guys can, placing an alert at these points of interest, okay? And the reasoning being behind that is, if the volume, if the sellers can push it all the way down there and come down there, I want to get an alert, not take a take a trade blind, but get an alert that that this could become support and have pending orders, and then I could look to buy that pullback and maybe take it back up there. However, there's another thing that could happen here is that the sellers are strong and I'll get an alert, but then they break it through there. So then I wait for that bar to close, whether it's a daily candle or a 5-minute candle. I wait for it to close. It might be I get a wick and be an impulse and then come back up there, and then I could take the buy out of there. Then I noticed that they also broke it, but grabbed liquidity, closed back above, retested it. Then I'm going to go again with the buy. So those are two scenarios to look for buys. I'll give you one third final option is either it's breaking down, but then the bar closes below there. So if it closes below there, this then yellow line, point of interest, could start to become the resistance above us. So then when it comes back up to retest it, if the sellers now are positioning themselves down there and offering right at 3,500 and more are offering than there is buyers, then it's got a high probability it's going to get rejected and then continue to sell back down. But those three options can happen all at that location. Why? Because it's a particular location on a daily, and it's got a psychological number. It's 3,500. So that's where most transactions will happen. Why? Because the markets are efficient. It's an auction. It likes to transact at those psychological numbers. Okay, I've explained this many times. I don't want to waste today explaining that, but you guys should start getting an understanding like that. Also, there was a zone that was made from that previous all-time high right there. Sometimes it takes two bodies to recognize. That's what I've been telling you guys from day one. All it takes is two bodies. Once you recognize a bullish and bearish body, kind of like barcoding. If you start to see it barcoding, right away learn how to trap that volume and stretch it into the future. And then you might be surprised that when it comes right back into that red location, look at, then you see a double top and then the drop. And then you'll start to recognize double tops, triple tops, quad tops, all of these things. It came back in, back down, came back in, back down. Stretching into future, same thing. Came back in, came back down, came in and back down. Now you start to see volume close above. So when that happens, the same zone, you've already established size zone, you just change the color to represent from resistance now to represent supporting zone. So if it breaks, when it's coming down and it breaks this yellow line, I have a high probability that it could come in here, and that's where the big buyers are. Here it could be just daily point of interest, but this is a demand zone. So when it comes in here, that's where it could really fly out of there or come back here, and then there would be the double bottom, and there's the daily neckline, get above, retest, and then we're going back up. Do you guys understand? You got to have a little bit of pattern recognition. You got to learn what to look for prior to it happening. That's why I go through this every single day with you guys, because once you start recognizing your zones, the patterns will play out naturally. It just takes patience for the volume to come into these zones. But when they do, you want to be ready. How to be ready is, I like to place a line rate in the middle, always at 50%. I'm a 50% kind of psychological trader, I like to call myself. And then look at there, 3,400, right? And it's right in the middle of that block. Like, guys, it doesn't get any more psychological than that. Add an alert there, created. See how I'm creating alerts below my depth of market if gold ever does come back down in there? We're nowhere near that right now, but that's for education, guys, okay? So let's do, more importantly, what do we have going on up here? Okay, so I can see we did hit an all-time high. It's right there. So again, my orange line is representing all-time high. Above that 3,700 psychological area, 3,707 is our new all-time high. And it was hit on Wednesday. Wednesday was a big day in the markets. It was FOMC. So gold broke to the all-time high, and then it came back down and closed. And now we're starting to have another bearish day yesterday. And we'll see today where gold is going to close. It's going to come back up, or they're going to push this thing back down. And we could be gearing ready to get into a sell leg coming into next week. Okay, so some specific locations now. I see my all-time high, and then it takes two bodies to establish a zone. Okay, so this is me now practicing what I'm preaching, where you can locate now the highest point, that's an all-time high orange line, and then come down to those two bodies where it opened and closed, right? And I'm gonna go with a red zone because that's the all-time high, and I can see it got rejected and closed right there. So that red zone, I'm stretching into the future, because if it ever does come back in, let's say next week, comes in here, that could be probably the second top, and then the M pattern coming down to break the neckline, right? I could be entirely wrong, right? It could be very bullish and break right through there for a new all-time high. That's fine. At least I acknowledge where the zone is, because if it closes above, I'm just going to flip that zone to green and look to buy the next pullback. Buy at discount after it makes a new higher high. Look to buy the discount and continue to go back up. But I need those buyers to prove to me, to confirm to me that they can close above there, okay? So right now, I'm giving the benefit of doubt that the sellers are there. They're showing me they're already there, so why would they not be there again in the future? That's what I do. I stretch it into the future. Another critical zone is this. I've been talking about this bullish flag zone, okay? So how do we do that? Sometimes it just takes a couple bodies to identify, again, where the volume is located, okay? You notice how I'm not making my zone all the way at the top of that wick or right there. I'm going right in to capture those bodies of volume, okay? So you see how I got that blue volume. I see that blue candle broke out, but it closed right there as a shooting star. Again, it opened up right there, impulse, closed right there. This was a bearish candle, opened up, came down, closed inside. This was another bullish candle. See how I'm trapping all of that volume? And then I see those two bars are above. That zone then is green. Follow with me, guys. Stretch it into the future. Then I can see exactly yesterday came in here and went closed above it. Today's low came in here and we flipped the candle back up so we could start to move back up. This is our zones now, okay? So you can clearly see what I've constructed here. We're coming up right there, all-time high, one top, coming back down. There's our neckline, demand, support. It could definitely come back up off of here. It could come up halfway, trading into 50% of that bearish candle, and then they go down with a lower high. It could come all the way up in there. You know, it could produce the new higher high, or it could be like a double top in there, then it's coming back down. Then when it comes back down, you can see there's the M pattern, and this is the block that we have to break. So we got to see a break and then we flip it red, and then we're coming in here and then maybe retesting and pushing down. So you see, guys, how that could work out. And again, I'm explaining this on daily candlesticks. If this was 5-minute candlesticks, I'd be explaining the same shit. If this was on 30 minutes, I'd be saying the same exact stuff. It's just once you understand pattern recognition, time frame is just up to you. I like fast scalping. I suffer from migraines. I want to get in the markets quickly, make my daily goal in about 30 minutes, 1 hour, and I want to get away from these computers as fast as possible. That's what I've learned over the years. I don't want to stare at computers for 4 hours, 6 hours, 8 hours a day. Unfortunately, I do it with you guys because I'm a streamer and helping to educate you guys. But prior to trading with YouTube, or when I was doing this by myself and didn't do anything live, I was trading, get up maybe 8 in the morning, do my analysis, get ready for the markets, hopefully hit my daily goal. My daily goal is not a lot. It's only about 50 to 100 pips a day. And that's enough for me to get my daily goal, get my market share, and get out of the markets, okay? So you see, guys, now how you can stretch those zones into the future. So we're developing right now today at the neckline. So it's got a probability it could come back up, or sellers could push this thing right back down, okay? Now let's get a little bit more deeper into this area and figure out a few points of interest, okay? Number one, from FOMC, there was a big bearish candle that came down and closed below majority of those. So can we figure out where's 50% of that point of control of FOMC's volume? Absolutely we can. Grab your Fibonacci tool and let it do the work for you. Very simple. There is the 0.5. Let's draw a yellow line for daily point of interest. And notice how yesterday's high came right up there, right exactly up to it, and got rejected back down, okay? Where's our point of control, bearish point of control from FOMC? It is clearly right there now. How did I know that? I did not guess. I used mathematics. Very simple. It's the 618382 zone on your Fibonacci tool. You might have these also inverted where your 618 or 382 is at above or below. It all depends if you have it reversed or where you measured it from the top to the bottom or to the bottom to the top. But anyways, you just want that bearish point of control. And there now I can see yesterday opened bullish, came in bullish, 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 right in there. Got rejected back down. So those sellers are telling me that they're still controlling that location. Sellers are still there. How can I tell? Look at the candle. They rejected all of those early buyers, came back down to the opening price, flipped the candle, took out the previous day's low, came all the way deep down into the green zone, came right back up, and look at where it closed. So now when I'm looking at closing price, opening price, I can start to see a new point of interest. Where did we close yesterday? Where did we open today? Right there, 3,643. I don't see any gap downs, gap up in the markets. It was a clean transitional open, but when it opened, it was bearish. Okay, so today was bearish. It came bearish, bearish. That was a black candle come in there again. But look, it created a higher low from yesterday. Still has not closed with any black volume in this green zone. So that's telling me the buyers are still there and they're still holding this zone up, okay? And there was our low of the day, 36.32. We came right back up out of that green zone, back to our opening position, and the buyers are strong. They flipped the candle. They're bullish, 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 bullish. They were engulfing yesterday's bearish volume. They got it all the way up there, but then it 36.61, and they got rejected back down. So there's our highest point of the day. It is a lower high than yesterday, and we're still below that red zone. Okay, so now we got a little bit of sellers pushing it down. So will they be able to offer for all of this daily volume and keep pushing this blue volume down, 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 come back to the opening price? Then it turns black candle, and then we're filling the wick and maybe testing down here to break down. That's why it's important to do some weekly analysis to figure out where daily bars close. It's a different story if it closes above this red zone at the end of today. It's a different story if it closes inside this green zone today, and it's a completely different story if it closes black below this green zone today. So that's what you should be doing on the weekends, right? You should be doing a little bit of research on the securities that you particularly trade. Now, final thing what I do is this current volume that's been trading, I know it's 10 more hours to go in this daily candle before it closes, but right now I just want to get a point of interest of this current volume. So I want to find exactly 50% of the current blue volume that's in the candle right now. So I go from the opening price to where it's trading at right now. I know it's fluctuating, it's moving, but this is giving me a pretty accurate indication of look at the number 2, guys. I don't make this stuff up. 3,649.94 cents. It's like a Walmart price tag, 6 cents off of 36.50. They're giving us a little tiny discount. Wow, 6-penny discount, okay? But that yellow line now is representing 50% of the current volume. So if it comes all the way back down, sellers manage to push it down right there, maybe buyers will step in, hold it right there, and bring it back up. If the buyers lose this 36.50, that psychological number today, then sellers might have the momentum to continue to push it down. Where? To the opening price, 36.43, and then ultimately come maybe down the wick, okay? So that's what's going on. Let's see if we'll come back to the high and break out. If we do break out, again, we have to manage this red box above us as well, okay? So that's how gold is trading right now. Let's break it down into the 4 hours to get a better snapshot picture of how it was trading in Europe. So I can see over here the 4-hour candles back on Tuesday prior to FOMC. It was trading near the all-time high. They came back down. The day of FOMC, see how they brought it up, and came all the way right up there. There was the all-time high and brought it all the way back down. Volume closing below, came in, lower high, came in, pushing back down. Thursday now, okay, so now we're starting to see a little stuff. On Thursday, it came in. Look at Europe. This was European candle yesterday, 6 to 10 a.m., bearish engulfing. Look how many times the 4-hour candles transacted in this bigger green block. Came in, back up, came in, closed right there, came in, closed right there. Spin top candle, came in, closed. And then this big bullish one was 10 p.m. to 2 a.m. yesterday. And look at our European candle. So right here, 2 to 6 a.m., this represents pre-London, London, Frankfurt, Switzerland, closing at 6 a.m. And look, it was bearish, bearish, bearish. Came in, got a higher low, coming right back up. It closed as a 4-hour hammer candle with a tiny wick. So it should have, when you ask me, it should have opened. It did pop that wick, but it should have technically filled that prior wick and tested today's daily high. And you see on the 4 hours, they're holding it down. At the daily high, there's my 4-hour bodies. So right there, I can draw like a red zone as well, right there. And then I can see that they're printing this big bearish candle that's coming all the way down. So our hourly point of interest is right here, where we closed and where we opened, right there, 3652. So I'm going to place a yellow, or not a yellow line, a white line to let me know that this is an hourly location that I got to watch. See if it will hold hourly or continue to go back up. If this 4-hour candle breaks this, we're easily going to maybe come back down to 3649. And I know that that is representing 50% of the entire bullish candle so far. Okay, so you can see now what they did. They put another block in the market on the 4-hour. So we're technically moving down. It's got a lower low, came back up all-time high, then new lower low, came back up, lower high, new lower low, that wick broke, coming back up, and you see how they put that wall there now? So this could be another lower high, and they're pushing it right back down. So we got to see today, are we going to get some hourly volume closing above this purple line? Then maybe we'll have enough to get up to this zone, right? So right now it's coming down. There's still a lot of time. There's 3 hours left on this candle, so we'll see what happens, but we can watch it now on the hourly. So when I break the market down into the single 1-hour candles, then it starts to look a little bit different. But now I can start to see how we were trading hourly right into the FOMC. They broke it out. It was very bullish for just a couple seconds. Remember that big bullish candle? Then they rejected it back down. Look at how it closed FOMC. Then it slowly came back up right into where? 50% of that hourly candle. So if I did the same thing and I grabbed my Fibonacci tool from the open and close of that, I guarantee you 50% would be right there, and it would have came right in, right back down. There it came right back in, ran back down. There's a double top drop, but you see how it's not breaking the neckline. It's holding this green zone. It comes in there, back up, comes in here, it consolidates, goes in here, back up. Now I can see the block there. 3 1-hour candles came in, 2 went down, 3 came back up, double top, and now it could be pushing back down right now. But it's still got, I have to respect the buyers as well, because they do have a higher low, higher low, higher low. So they are kind of building it out of here slowly. Like if I was to draw an hourly trend line from today's lowest point right there and bring it up, like that's an hourly trend line. I'll make it white because I got this from the hourly, right? So it is holding right there. I see the pullback, holding the daily position, trend line, go back up. We could be coming right back down. There's the hourly white line, trend line, and then there's the 3650 psychological 50% of today's daily volume. So that's what we got to watch for. Are the sellers going to break this and drop it, or are the buyers going to build it back up? And this is what we're struggling to get above, okay? 3660. Now we can go into the lower time frames, either the 15-minute or the 5-minute. Whatever floats your boat, you go in. I can see the 5-minute candles coming in right up there, highest point, 1 a.m. and then they dropped it back down. Kind of made an ugly double bottom with these wicks, but I see how the pattern recognition came down, neckline, came back down, double bottom, start to drive back up. It came all the way in there. Did we test that red zone? No. Lower high, came back down. Did we break all the way down there? No. 5 minutes are holding. Came back up there. Now we got like a double top. From this one top, we're back in here, and they're dropping it back down, okay? So you could look at this overall as one big pattern. This one whole leg came up, one top. This whole leg came down. All this shit down here is one bottom, coming all the way back up. There's this whole leg coming back up, your second top. But notice it's not directly right up there. It's a lower high. Okay, so that's telling me the sellers want to push this thing down, and they currently are pushing it down right there. It's making a lower low, lower high, might push back down. So right here is where I want to look to see if the hourly buyers will step in at 36.52 at the white line, trend line, or more importantly, the 50% of the daily bullish volume right in here. So I can maybe place like an alert here to let me know if it gets down there to watch for maybe a possible buy, or see if these sellers are serious to break this location. But I would be maybe entertaining a buy. If you want a zone, so you see how the white line and the yellow line are very close together, just right in here, maybe do this. Just draw like a green block, and let's see if it comes in here and how it reacts out of there. You guys got that? And in the size of the green block, I didn't guess how big to like just guess the size of it. I'm just utilizing my hourly. support and my daily point of interest, yellow line right there, reading the tape. And that tells me how big my block should be. Does that make sense, guys? So on the short time frame, there's my cut line. I'd be looking right there, okay? So let's see what happens if it comes in there, okay? So what we can do now to complement our charting analysis is to add the SST daily bar indicator to show me there was the opening price. It was very bearish, came down to the lowest point of the day right there. That big wick came down but went back up. We came back to the opening price right there, and then we moved up to the highest point of the day at 1 a.m. And since then, it came back down, coming back up, and now this is representing the wick. So you see right there, that target, it's like a crossfire. You know, if you're shooting a rifle like a sniper, it's got you got your scope. So right there, I could be looking to nail an entry, like a sniper entry right there. If it comes in there, maybe we'll buy back out of there, right? But if the sellers close it below there, that zone could turn red, and then all of a sudden it's coming back down to the opening price. You guys understand that? So that's what we could be looking for, is a possible buy out of this location, as long as the volume cooperates, right? This is just a setup. But I gotta wait for it to come in there. It might not even come in here. I might catch some wicks here and go back up, okay? But that's still for all day today to recognize that area, right? Okay, so let's add then our indicators. Our 9 EMA is this green line. We're below the 9 EMA. There's the 200 EMA. Look at the 200 EMA is coinciding with our zone. So it's right in there as well. So when you're looking for confluence, you're in between an hourly and a daily supporting area. We do have a block. It's representing also 50% of the current daily volume. And we also have a trend line and a 200 EMA at that location as well. So all we got to do now is wait for maybe a possibility of it coming down. Right now, if you look at the 5-minute trend, just on this leg, it is bearish pushing down. So let's see if it can push right down into that green zone and see what we can do. So I'll make this trend line red just to represent the 5-minute time frame, okay? You got that, Sniper? I like your name, Sniper KE, same view on gold. Nice, good. Guys, I wanted to ask you guys, how many of you guys are doing your top-down analysis and coming into this with me, and we're matching things up? Does this look pretty good regarding your charting? Do you guys have those daily locations marked up as well, like where I do, or no? Justin, almost exact every morning now. Amazing. Justin, now all it takes is a little bit of watching the reactions, what happened in those zones. Just, you know, for learning purposes, Justin, because I know you're learning, just have some small orders in there, right? We're not going to get rich quick overnight. It's not an overnight thing, but see what happens. Like the way how I was practicing when I was learning this was I would look for the volume to come in here. I would take a trade and see, you know, what the results were. Was it a positive trade? If it was, then I knew that my analysis was correct. I looked at also the drawdown. When I took that trade in there, was there minimal to no drawdown, or was there drawdown? Then if there was drawdown, I started to figure out what they were doing underneath and to grab that drawdown. If there was a trade that was taken with minimal to no drawdown, then I know I nailed that zone perfectly, right? That's what we want to try and do in trading, is nail these zones. The best thing to do, guys, is be patient, discipline, allow the volume to naturally come into the zone, right? If there's a big block of buyers in there, you don't think the market makers want to come in there and grab that liquidity in there, grab that volume? If they really, like, I'm not a market maker, but if I was, I'll tell you what I would do. If I was a market maker and I want to take gold back up to the next leg up, and I know that there's a lot of money inside here, or there's a lot of volume, remember, let's say there's some fish in there, okay? So if I was a fisherman, right, maybe I'm out on the lake and I got my boat out there and my fish finder is starting to beep now because there's a lot of fish in here. Maybe I want to come in there and test out those fish. Maybe I could come in there, hook that guy, and hook, line, and sinker, and take him back up. And then when I take him back up, I'll release him up here, right? Catch and release. We catch that fish down there, and then we release him up there when we make a new high. Then you're catch and release fishing, but we're gonna catch and release pips, okay? So that's a stupid analogy, but you guys gotta understand what I'm saying. There's some money, some fish in there, some pancakes, whatever you call it. Let's see if they want to come in there and go fishing. Is anyone in a trade right now? It helps me with understanding, are you guys in a buy? Is anyone selling right now? This also is a point of interest on the 5 minutes. Reason being, now I can see right there, it was resistance. That was a big impulse candle that broke out. Volume below, impulse, impulse, impulse. Volume closed above. And then when it came back down, you see how it held, pivoted right there. So it's showing me support. Right there again, impulse, volume closed above, lower high. That bear bar closed below. There's a 3-bar play right below it and pushing down. So if I'm looking, you know, to break the resistance, okay, now we're coming down. Let's see, this bar is going to close in 2 minutes. Let's see if it will come deep down in here. Will it miss this? Will it take one more candle to come in here? And then we watch what happens in here. A lot of you guys are in sells. Nice. Nice. Yep. Sell. 713. Okay, right there it's the 3655. Volume closed below. Okay. There was a bar that closed below. Retest and dropping currently. Okay. So that 3655. Let's mark it on our charts. 36 right there. 3655. Guys, I didn't see the Discord, but right there you see how it picked that location up. Okay. So that's our SST sell right below there. Okay. So I'm just making that like a red block. Okay. So that's great, guys. If you guys are in that sell, perfect. Okay. So from 3655 down to 62, 30 pips. You could, if you're up 30 pips right now, you could, if you like, to reduce your risk and go to a break even or whatever you guys like. But, you know, you should have some sort of plan. Okay. So it is pushing down. Okay, so look at big bear candle came right through. Okay. Now let's see what type of reaction we have in here. Will we find our buyers? You know, it could come, but with this momentum, it could come in here and go right back up, right into like 50% of that candle. Maybe they push it back down and then breaking back down. Okay, so we got to really watch this. Yeah, you guys didn't see the SST signal. I know it's not always easy, but you should have some sort of alerts, guys, if you do get it. Okay, also right here, we could be looking for Nasdaq sell at below 24,510. We'll do that when we chart Nasdaq. Some of you guys already have your charting done and can get that done. But okay, so it came out at 640, guys, right there, and then now it's breaking down. Okay, so did you guys figure out now where 50% of that big bearish candle is? You know, get your cut line, because if it's coming back up to about 50%. See, I'm just guessing right there. I'm just looking the opening, closing, and guessing that that's 50%. I don't need to guess. You can grab your Fibonacci from the opening to the closing price. And there's the exact 50 right there, okay? You could also do a minor point of control of that candle if you're still in the sell to continue to push down. Okay, has it retested that red box? It came close, a lower high, and could be a shooting star ready to break and come right into that 50% of that block in there. Okay, so just for all the sellers, if you're selling, just a reminder that this is 50% of the bullish candle, and we'll see if they protect this zone and come back up, or we can maybe cut right through here with the sellers. Okay, so we do have that minor zone right there. Okay. Shamir, you're in a trade selling. Good for you. Nice. A lot of you guys were in the sell. Good. As long as you guys had the right bias, that's fantastic. Okay. I think I get a lot of migraine headaches too, and I drink a lot of caffeine. I drink a lot of coffee. That day I told you guys I had like 3 or 4 coffees, and I think that's what really, made the migraine. Guys, we have almost 500 viewers and 150 likes. If you guys wouldn't mind hitting the like button, we do appreciate it, guys. Thank you very much. That helps us to continue to come here and educate and live trade with you guys and break things down and do webinars and blogs and all of these things. And if you guys are getting value out of our channel, thank you guys. We do appreciate it. Subscribe to the channel if you haven't. If we can get this to 86,000 today, I highly doubt it, but if we can, I will come in for a Monday night swing trading session and show you guys how swing trading works. I know a lot of you guys want to learn that as well. Doesn't always have to be about lower time frames, and swing trading can be more relaxed, more easier. You can allow trades to develop for multiple days as long as you know what you're looking for. Like if these were 4-hour, for example, if this chart were 4-hour candles, same thing. Maybe you'd take a 4-hour candle sell at that 655, and maybe where it dropped 30 pips, it's on 4-hour candles. If you got 2 4-hour bodies, like almost 1 day of trading, that could be about approximately 300 pips. So it's completely different than trading like 5-minute candles. Okay. And that takes a lot of stress away, where you don't have to sit and stare at candles all day. If you suffer from migraines, maybe that's something. Look for higher time frame swing trading. Maybe have 2 accounts, guys, two accounts. One specifically for swing trading. I have that. I have one account specifically for swing trades. So when I'm trading that account, it's only swing trading. I use a different risk management plan when I'm swing trading. Have different targets, bigger goals. Stop losses are a little larger as well because I'm looking for bigger moves. And then I have one account dedicated to scalping and intraday trading, where when I'm using that account, it's strictly for scalping. I don't mix up the accounts, right? Okay, so you see that? Retest, continue drop. Let's see now. Now it's coming into the green zone, guys. Right in there, okay? Okay, you see? Right where that fish just bit, okay? So that fish just got a bite. You know when you're fishing and you get a little nibble, okay? You get excited, and then you might hook it too early and it's not hooked, and then the volume might have to come down there and catch another one, okay? So this guy bit in there. So we got to watch now how the body will close. And if you're selling too, you also got to know as sellers where you're coming into a zone where there could be some buyers. Maybe that's where you got to de-risk. So if I was in this sell, for example, I would take my stop loss, maybe be at a break even right now. While I'm up 30, 40 pips, I'd be at a break even. So if it does come all the way back up, I'm not allowing it to continue to go further and go for my stop loss. That's one way to de-risk. Or you could also do what I do, is a scale out approach. I take out 80% and leave 20% running. Some of you guys might do 60-40, 50-50. Some of you guys might be different. I take more of the bulk of the trade at 80% and leave 20% running. There's other traders that said, Ron, I do it opposite from you. They take out 20% and leave the bulk 80% running behind. That's fine. Whatever works for them, I'm not here to tell you what to do. I'm telling you what I do. And the reasoning being why I take out 80% like on the bulk of the move is because I'm a scalper. So it might last for like 5, 10, 15 minutes. I get my 30, 40, 50 pips. I want to take the majority, 80% out of it, because I used to just close the entire trades. That's what I used to do. I used to just close the entire trades. It worked well for me too, but then I was leaving a lot on the table because like runners would run. So then I'm like, how can I fix this? So still taking out 80%, still taking out the bulk, but leaving 20% running. 20% running could continue to run. You know, like my runner could tell me more information if it's running down here, telling me how deep the depth of market is, where it could come back up and pull back. And my runner is also giving me information too. So then if it comes back up and the location goes back down, I could go in with another order. My runner is like a leading indicator, letting me know how the depth of market is working below or above. Okay, it's kind of like telling you a lot of valuable information while you're in a trade. Okay, look at how it came back up, lower high rejection. Let's see. Remember this candle opened bullish, okay? So it's opening right at that 200 EMA. So they've rejected it back down, okay? So they could flip this volume in 2.5 minutes, turn it in bear shooting star, and maybe come back down in here and see if there's going to be some bigger fish that want to bite. However, it could be building and holding right here, okay? So that's a big rejection. So you see those buyers came in off of that wick, brought it right back up. And then now it's coming, getting rejected. Might come a little deeper down into here. Okay, there's the shooting star candle. There it is. Let's see it now, pushing right back in there. Now, will it fill that wick, come right exactly to 50% and go for a new lower low? Or will buyers come back in? Will these fish come back in and start biting it and produce a higher low? Okay. I know it's silly with this fish, but it's literally what it is they could be biting, you know, they still haven't, it's coming back up bullish now it's engulfing that previous bar with 90 seconds to go. So let's see, maybe are we going to find some consolidation down here? Is it going to hold? Is it going to go back up, or is sellers going to continue breaking this thing down? And if you guys are in from the SST signal, okay, remember 655, approximately it's about 40 pips now, okay? So you could be, you know, reducing a little bit of risk or let it run, okay? We're still below this, lower high rejection, if you're still in it, guys. So we can break down our signals with you guys as well, live, right? There's not too many groups that can do that. They just send you a signal, and I've seen signal groups. I used to be part of a signal group 10 years ago, and they never did anything, like no trade management, no recaps, just say buy gold here, sell gold here, and that's it. You wouldn't hear from them again. And I'm like, I want to learn how to trade. Okay, so that was a big push down. Again, let's see. Remember, this red line is exactly 50% of this zone. Okay, so open bearish ignited could get that one more, you know, push, that deep push. Maybe are the, okay, so you see it's a bearish ignited candle, still pushing down, guys. That's approximately 50 pips from entry. If you guys are in, wow, okay, so still really bearish. See those rejections, lower lows, lower highs. Bearish ignited, still pushing down. Okay, this yellow line and the bottom of this green box is a daily point of interest. 3650, it's also a psychological number, and remember, it's representing exactly 50% of that bullish daily volume candle. Remember, it was all the way up here and we measured it. Now it's coming down. That is exactly 50% right there. So this is where we'll see, will the buyers be protecting it? Look, when we came down right there, the big wick happened at that yellow line, and then it went all the way right up there. Now we're coming all the way right back down. So will it hold that? Okay, so you see how it wicked off. Will they turn the candle back up bullish to maybe start a leg coming back up? And then you could be buying out of a green zone here. So if I look to buy, right, I know I'm counter trading our signal, but the signal maybe was perfect to come down into the green zone. If you're still holding it, that's great. Look for it to close below to flip that zone green to red and continue pushing down. But for buyers, you know, we can't neglect this zone either. We got to see if buyers can push this thing back up, close it with a blue candle, maybe build out of here. We could maybe look to scalp a buy, maybe back up to here or back up to here. But if sellers are still pushing this down, it's still showing me that ignited head and still pushing down, okay? So now I got to wait 3 minutes to go into the close. It might even close below here and have one more leg down. Sergio, you like the fish? Yeah, these are some little perch here. Maybe the big pickerel, maybe the big walleye, maybe the big lake trout will come in and take a big bite. These are the little perch. These are little fish fry right now. Oh, you guys got me hungry for some fish and chips. Fridays, I normally take my parents. They love fish and chips. So this afternoon, you guys just reminded me. I'm going to go grab my parents and take them for some perch and pickerel dinner. We have beautiful Great Lakes here close to my house. We have Lake Erie, and the boats go out there every single morning, catch some fresh lake pickerel, lake perch, and right there, it's a nice little, they got a little marina there, and there's a nice little cove and a nice little restaurant there, and it's really, really good. If you guys are ever in town, I will take you guys out there if you guys like fish. It's a great little fish and chip place. Okay, so they flipped the candle now. Okay, you see how it came back up with the wick and it turned blue as a bullish pin bar. So we now have 1 minute and 45 seconds to go. Let's see the final close. Okay, so it could come back up and close like a hammer right again above the green zone, and maybe we'll have a next leg coming back up out of there. But we have to watch, you know, where the candle will close. So when it turned blue, the sellers are right back in there pushing it right back down. So we can't judge a candle until it closes. If we do take a trade prior to it closing, then unfortunately it's an impulse trade, right? And we do take impulse trades. You do, I do, we all do. But if you're taking a trade prior to it closing, we still don't have the full confirmation. I know you're trying to time it, and as soon as it turns blue, you want to get in because you want to be part of that next leg that comes up. But sometimes when it turns blue, they flash it blue and we get stuck. I've happened to me a lot of times on these live calls. You know, I'm not going to say every trader can just nail it. No, it's impossible. Okay. So like that candle was coming up with a nice wick, turned blue. Buyers bought it. We can tell there's a wick on there. So it's best practice to wait for candles to close, guys. You know, and don't play the woulda, shoulda, coulda game. I know it could have came up and been a blue candle and came up here. But if you go with that approach, just saying that, then what happens? You get caught and draw down. Then what? Just try to the best of your ability to wait for candles to close. I know, yes, you might miss out on an impulse trade, but you can always maybe catch the next candle and it's more confirmed. You guys will learn. The more exposed you get to candles, and as long as you guys are journaling your wins and your losses and your break-evens, then you go back and you review. Then, like if I took that buy and I got stopped out, then I would come back and review and say, what the hell? I bought that wick and then I got faked out. So you got to learn from it. You know, look at there. The sellers came back down and they closed it below, and we're below here now. So it might have one more leg to push back down to get it down to the actual higher time frame daily yellow line right there, and that is representing exactly 50% of the bullish volume when we started the call where we measured it. So that's a very psychological area, and look at the number, 3,649.94 so that psychological 3650 is right there as well. Okay, now you can see how that red line momentarily is turning into resistance. With that body that closed below, open bullish ignited, came right back up, retesting it, it's got a little tiny wick. So as it's coming down, it's refueling itself there, it got rejected again. So you see how it's holding as resistance right now, momentarily resistance. If you guys are still in this sell from the signal, guys, I hope I'm breaking it down, but that's beautiful. You got lower highs, lower lows, volume pushing down, and another shooting star candle coming all the way down. Might clear this entire green zone. Okay, so now if it breaks here, yeah, there's the break. Where could it drop down to and catch a wick? I would be looking right there, 50% of that bullish body right there. because I can see where they inverted it. There was a big bearish candle. If I was looking at 50% of that, it would be like right around there. Then it came down double bottom. That's your inversion, your ICT trade. Sweep the liquidity, come back up, invert that zone, and go back up. When I'm looking at it, I don't know the ICT language. All I see is the break of the opening price right there. It built, I told you, it was an ugly double bottom with those wicks, volume closing above, and then you can take it right back up. I was watching a couple of videos on ICT on TikTok and seeing guys how they're explaining it. A lot of fancy words, but for the same shit that's going on here. Just taking out the opening position, double bottom, volume close above. They inverted this bearish bar. Like if I made this red zone, green zone, same shit. That would have been a red zone. Then with that bar that closed above, turn it into a green zone. That's it. Okay, without using all those fancy words. Okay, so now if this bear bar continues to close below here, this whole fish zone, this green zone is going to turn red. So then if the buyers are coming back in, it could be coming into big now sellers, okay? Look at it, continue to push down. Wow. That's 65 pips from the signal, guys. Right there. Should be updated. 65 pips running now, okay? So right here, you know, that's how you can follow our signals. That's an important area, that 3655. I have the red line there, volume close below, and starting to push down. Now that's what I was just talking about, that inverted zone. So we'll see what happens when it comes down there, okay? So I see a lot of you guys are looking to buy now, right? But you got to be careful too, because they could continue to bleed this out. There's the 9 catching up to the 200 EMA. That could signal like a bearish crossover. But when it comes, it could come back up in there, and then they reject it back down, okay? So if you're going to go on a buy, I would, if you're entertaining a buy, go with a small buy. Try a feeler trade. I know some of you guys maybe have not used that style of trading, but just go in small. Test it out. You know, test the water out. Test the water. You don't know if it's going to be a little fish in there or it's going to be a big shark or a whale that's going to swallow you, okay? So just if you look to take a buy, I know some of you guys are already chatting about it, looking to take a buy. Don't go all in. Because what if this thing continues to fall down? What if it closes below here and we make this zone red and then you're buying into a red zone? That doesn't make sense, right? I know you want to buy because it's dropped so far down, and maybe RSI, yeah, there it is. RSI is below 30, telling us right now, signaling we should be buying, but it could give us a false signal as well. Maybe I'd like to see, okay, so that wick is nice, grab that liquidity, but I'd like to see the candle close strong blue, maybe above this, and then maybe it could start that lag to come back up a little bit, okay? So this candle now is closing in 30 seconds. So if you bought down there, you're part of this, you're in the money on a buy, but let's see where it will close, okay? Because I might join you guys in a buy as well. But this could continue pushing down, so we got to watch where this volume closes. Okay, good, solid candle. Okay, close right at the red line, bullish ignited. Okay, let's see if it can come down. Let's see if it can pick up a quick wick and maybe look to see to buy this. Just coming right there, the 50% of that green block. Okay, back down. So I'm holding off, I'm watching it. Bearish candle, let's see if it can pick up a higher low wick and come back up. No, it's bearish, coming back down. See how strong the sellers still are in there? Okay, good flip on the wick there. Still held at that point of interest of the body. Now I look for the candle to flip up green. And this could be the first leg coming back up if it does. Remember, then they might push it back down. Then we got to look for that double bottom, right? But it's still building inside this green zone, but sellers are still there. They're showing us they're still strong. They're engulfing that previous bar coming down. But now this is where it might develop wicks down here. We will see. Awesome, guys. 550 viewers. Thank you, guys. Okay, so see the candle came back down, got a wick, still respecting higher lows, still in there. Maybe got some bigger fish to bite in there, but the candle still has not flipped up blue. This might be one I might be entertaining, taking an impulse prior to it closing, okay? Because I see how it's building a little bit. There's where it's blue now, turned into a hammer, back down, holding, maybe refueling. One more time, coming back down to that opening price, refueling. Going back down, coming back up. Okay, you can see it's a bullish pin bar. Bullish pin bar. Okay, I'm going to go on a buy now, okay? I'm going to buy this hammer, and I'm going to see if it can fill back up to this red box, right? So I'm going to go in, I'm in a buy, right? I'm going to see if it can come back up, and that would be about 20 to 25 pips in there. And then maybe I could reduce my risk and see what will happen at that red zone if it gets up there. My stop loss, I could be right below that big wick, but I'm going to place it below that red line. Why? Because that red line was represented some structure right over here where it was turned to support. So my stop loss is just below that, okay? And then I want to see if it comes back down. Maybe it can develop a double bottom. Maybe pick up some more fish in here. I wanted to move my fish out of there and see if it will come back up. But ultimately, on a buy, I need to see some blue closing volume like above here so that it can build to break back out, okay? So I'm in a counter buy here. Two more minutes to go till the candle closes. I know there's a lot going on. It's a very busy chart here. Okay, so, also this. Sometimes I measure the length of that wick, and I want to find where it's halfway point of that wick, so how it's coming down, but it's like kind of right, right there. It's kind of the halfway point of that wick. So I want to see if it will create a higher low. Exactly like right in that location, and still holding above this yellow line. If this bearish candle closes below here, I might have to escape this trade because it could definitely continue to push back down. So this is how I manage my trades too when I get into a trade. If it's not working out, sometimes I don't hold it to go all the way towards my stop loss. If I see that the selling pressure is still there, I'll get out of my way. I'll get out of the way, right? I don't have an ego when I trade. If the sellers prove to me that they're stronger than the buyers, I have no problem getting out of the way. And guys, when I go into trades, like kind of feeling out the market, I go a little bit smaller sizing so I can really concentrate on what's going on. If everything is going the way how I like it, then I add positions. It's called positional trading. It's adding positions to on your trade while it's developing, right? So you sometimes got to let trades develop without panicking or being over leveraged in a trade. And if this green zone doesn't hold up, then you can tell that today the sellers are in control. Okay, they could it could be a selling day today. It could turn into one of those days where Friday gold is selling. Okay, so it did close below there. That was a big bearish candle. So I didn't get what I wanted. I didn't get that closure kind of above here or holding. So one more time, it's going to try to break this area. So this is where we need to get those bigger buyers to come in now, okay? Because this is now at the yellow line. This is a daily point of interest. Where I just bought in, it was just kind of 50% of this zone. But this is more where we want to see daily buyers start stepping in to see if they can protect 50% of that volume in that daily bullish candle. So I'd like to see if they can step in here and bring it up. If this closes below, then sellers could continue to push this thing down, okay? So I'm trying to build at this daily position in this green zone, but the sellers are right like near the bottom of it. trying to see if there's going to be a nice wick to flip this thing, and I don't see it. So it's a strong, strong selling candle. Okay, I'm going to close the trade. I'm going to exit it. I don't like it. So I'll take my loss, but I'm not going to let it come down to my stop loss. So, you know, I exited the trade right there. I saved myself maybe an additional 20 pips, and I'm out, okay? So the buyers proved to me they're not there. They're not at this yellow line. I don't want to be part of this, okay? I take a loss. I'm out. And I'll review again. Sellers are in full control. I don't want this bar to close below here, and I'm still in a buy, because this zone will be converted red, and then it could really drop. So, guys, I get in, I test things out. I don't like it, I get out. Okay? Yeah, you guys can say he took an L. That's fine with me. I don't give a shit. I'm not here to prove to you my win losses. I'm here to educate. I don't like that setup. I got in, tested it out. The buyers are not there. They're definitely not at this yellow line, because if they were there, they would be there. There would have been a wick, and this would have been returning back up there. They're not there. Okay, so it's sellers are still strong. You know, if I'm a buyer and sellers are showing strength, I get out of the way. Even if I was a buyer and or if I was a seller and buyers are showing strength, I get out of the way. Right? That's how trading works. Get out of the way. Let the, you know, I'm not above the markets. If you guys are still in sells, guys, look at it kind of breaking right below there. Down there could be a 75 pip trade from the SST signal, and no buyers in this block. So you see, guys, I originally had my stop loss below there. I don't need to give it an unnecessary risk. Why sit in there when you can clearly see that they're not there? I can revisit this later on. Guys, that's a lesson, right? That's a lesson for everybody. I hope you guys learn from that, okay? Don't like, I'm not worried, guys. I'm a live trader, and you think I'm worried about the wins and losses. I'm not. I'm beyond that point, guys, okay? I'm here to help you guys out and educate, because I know a lot of traders are buying, right? You guys even told me on YouTube you guys were buying. I tested it out with you, right? I came in with you guys. But I'm telling you, the market proved to us that, like, after that big return, when that came up, when it was hanging out there, it should, you know, that's when I bought, should have built right there. It didn't. That bearish candle came all the way down. When it came down to that daily line, that's where it should have got a wick and came back up. That's what I was saying. Are our daily buyers here? This is a yellow line. This is not just any just a line in the chart. This is a psychological area, 3,650. It was representing 50% of the bullish candle that when we started our analysis, and they're not there. See, the big sellers right there. My stop loss was down there, and I took it out. I exited the trade myself. Why give it an additional 20 pips of loss? For what? I can save that now, 20 pips that I just saved myself, and look for another trade to regain those pips that I just lost. Okay? You got to eliminate your ego in these markets, guys. You know, I know you guys were in buys, and you might have a bias. I had a bias too to buy out of there, but the sellers are proving us otherwise. Look how strong and deep that candle is now, okay? So if I stretch this zone into the future, now that's what we got to watch. Can they build above here, or is this going to be inverted red and it's still going to fall back down to our next daily location? Okay, so you see how close below that? This is a red zone now. Guys, on the sell, if you guys got some pips, you know, congrats. You could even have like a trailing stop loss going down there. Okay, so this big block now is no longer green. That's it. Sellers have closed it below and officially showing us that this could be a supply. So I'm just going to clean up that zone up there. We'll keep the original one, and we're still below. See what I did with this one? I brought that one across, that inverted one. I told you that was kind of like an ICT model over there, whatever you guys call it, kind of inverted, closed above. It was green, right there, closed below it. So now it could be still red, and they could have one more leg pushing back down. And guys, please learn the importance of where you are in a trade. And sometimes the market could be going in opposite direction from your bias. That's okay. You know, welcome to the world of trading. Happens to everybody. You're not the only one. It just happened to me. But I'm a different trader. I don't just sit in the market with my stop loss and wait for, like a sitting duck, and wait for them to take me out. I'm not a trader that just trades with a TP and a stop loss. I place it and I watch what happens. If the candle like preceding is doing something that I don't like, I exit the trade, right? When I journal this, I place it as an L in my journal. I did lose the trade, but I write in the remarks why I exited the trade, okay? Because there was a specific reason. Then I go back and look at it, and I look at the positives. I've saved myself over 20 pips because I exited early, and then the market kept breaking down. So those are the things I review. A lot of traders don't do that. They just look at, did you win or did you lose? And that's it. They just look at that. I look at everything. I'll show you guys how to do a journal. Guys on Zoom, I think you guys were asking about that, if I can do one again. I'll do it and just tell you guys the specific columns and categories which are important, what you should be writing. The way how you guys do it, I don't care how you guys do it. Some of you guys are really good with Excel spreadsheets. Some of you guys, I just write shit down on a piece of paper, guys. I'm old school like that. So I'm not, but if you guys do Excel, I can tell you each column, what to do, what to write in there, and help you guys with that. Yeah, Justin, I'll help you with that. No worries. Sunshine, been watching our lives for 2 weeks and want to thank us for the way how we do it. Thank you. We want to be transparent with you guys, show you other sides of trading, show you how I took a loss there, but I want you guys learning. That's why I'm here, okay? I don't get excited about the, taking live trades, win-loss. I don't care about that. Yeah, it is exciting when we're winning, but this is going to happen to you, whether you like it or not, in a trade. You're going to get in a trade later today or tomorrow or on Monday or next week. And the trade will be completely going against you. And you're still holding your bias. But sometimes you got to learn how to close a trade when it's against you, okay? You got to understand that sometimes our bias can be incorrect. Sometimes these zones are not 100% correct, right? We can only do so much as traders, but you got to start to get a little mature when you're trading. Start to understand that if a trade is not doing what you want, you don't have to sit in it all day, right? I saw that candle came up nicely. I told you guys I'm buying on an impulse before it closed because where it was at that 50 and it was building. It was an ignited candle building. How many times did I say it came down, refueled? Third time I went in on a buy, and then that candle showed me when it came down at that yellow line. I was looking one more final attempt for the buyers to step in at that yellow line. As soon as I saw it opening, I said, guys, I'm out, because I don't want it to close below there and keep dropping like it's doing now. That's where I would have technically had my stop loss, right below there, and it would have been tagged out. An additional 20 pips would have been lost where I didn't need to, guys. Trading is all about capital preservation, okay? I don't just say that just to say it and just talk about it. I actually preach what I say. Capital preservation. I know it might not be a lot to you guys, but I just saved myself 20 additional pips from just giving it to the market and say, here's my additional 20 pips. But now I'm more psychologically focused that I saved myself 20 pips. I still understand I took a loss, but my mentality is I still saved myself 20 pips from further loss that now I can look to place it on another trade to recoup what I just lost and get myself back to break even. And then once I'm back to break even, I can start to, again, trade. I came back, and now it's, again, time to analyze and study the markets again without losing focus, without getting mad, without revenge trading, without adding. Some traders are still in that buy, you might be adding another buy because you think now it's a better discount. It dropped even further. Let me add a second buy. Then when you're doing that, there's a market that's trending down and you could continue to get absorbed, and then they break it down for another lower low. And then now you're in two buys and they're both in drawdown. And how many of us have been through that? I have. I'll raise my hand. I'll be the first one to tell you. That's a common mistake we all make as retail traders, is we can't close out that trade because our bias told us to buy, and we keep buying now. We think every push down is another attempt to just buy a discount because we have that in our brain. That is just a discount, a discount. We keep buying, we keep buying. Do that on a bearish day. When it's bearish trending day, when it's making lower lows and lower highs and lower lows and lower highs all day, and you think you're going to keep buying that discount, you're going to keep going down further and further and further and draw down. You are like part of the blue candles that just come up for a little bit and continue going back down. Like me, I was part of that little blue candle that came back up, but it continued to drop down. But I'm not part of any more just buying right back up until I get closing volume confirming. Like if I want to buy, I see buyers are stepping in right here, but again, they could just come up and then go right back down. I'd like to see them, number one, close above this block and build off of this to continue to come back up to this bigger one, because this is now a bigger red block, and now you just had a bearish crossover with the 9 EMA crossing below the 200 that could further push this move even down. So if you are considering buying, consider buying at these yellow lines. This one failed. That's why I got out. This one might be at the opening price of today. This one might be deeper and a better. Not just because we're buying pullbacks, not just because we're buying on discount, but relative to what this is. This is the opening balance. This is what started the day on gold, okay? And it's been trading for multiple hours now. So this is context. This is a different buying opportunity here. Now I could be buying where the original buyers were at the start of the day, okay? So it's completely different from just buying at this yellow line. This yellow line, I told you, was just representing 50% of that bullish volume. Now, when we look at the daily candle, when we measured it, we've lost that 50%. Like when we look at the daily now, where I base that off of, remember when we started the call early, the volume was trading like up here. That was 50% of the volume. Now you see the sellers on the daily are, look at, they keep offering to all of those buyers and could potentially push it down. There's the opening balance. That's where the buyers who open the balance, who brought it all the way up there, maybe they will be interested in buying back in again here. If we lose this, then the candle flips bearish and it's a bearish day on gold. Then be prepared to sell pullbacks today, unless something dramatic happens in COMEX in the next 25 minutes. Okay, see that, guys? How, again, it came back up. I'm looking for closing blue volume, and look at the sellers continue pushing it back down. Okay, you do not want to get in the habit of just continuing buying just because you think it's on discount, right? It's not. It doesn't work, especially in a trend now coming down. Lower lows, lower highs, lower lows, lower highs. It's difficult, guys. I'm telling you the honest truth. And if you're in the SST signal, guys, 80 plus pips, almost 90, okay? I would definitely be using a trailing stop loss or securing a little bit. It is a Friday. Congrats to those if you guys got in on the gold sell signal. Okay, look, and again, it closed below there. So now it could come back up and then get a lower high and continue dropping down. So this would be an opportunity to entertain a buy down in here at 36.43, 44, the opening price, if it gets down there, okay? But now we could be barcoding where it's bearish, bullish, bearish, bullish. Maybe they're going to make it a higher low from not even coming down here. But again, I'd like to see if they can bring it up, maybe close it above here, build off of this in order to take it back up to there, okay? But you see they got rejected again. Where? At the red zone, red line. Came back up bullish, 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 rejected, shooting star candle, continuing to push down. Sellers are in full control. Look at, they've almost absorbed all of the blue volume in today's daily candle, and this is just what's left right here, okay? So that should illustrate right there how strong the selling pressure is. So it looks like maybe if it comes back into here, I'm going to be looking to sell 36.50, 51, sell it back down to maybe the opening price, or maybe deeper down into here. Okay, it could be one of those days where we could be selling pullbacks and then continuing to trade with this trend. Yeah, DXY is very, very strong currently. Is there any news regarding the US over here? See, guys, why I got out of the way? You know, like, not a lot of live streamers will show and talk about that stuff. They'll just make an excuse why they got into that and they just lost. I provide context, guys. You saw I got out early. Okay, I didn't even allow it to come down to my stop loss. Why? Because I could see. I tested out that block right there. Were the buyers there? They were not. They showed me. And were those daily buyers there? No. And that's why I exited and told you guys. That's it. I've seen enough. I'm out. I don't need to wait for it to come down to hit my stop loss to prove something to me. Kel, you got it. Big Sergeant KLR. Is that you, Kenny? That's you, Kenny. I hope you're doing good, Kenny. So that drop, guys, okay, I'm just measuring the move from our signal is 100 pips. That could be your Friday goal right there. You know, anyone in Discord, if you guys got it, you could be done trading prior to even Comex, 8 a.m. Think about that. How many people are, some people are getting up for their 9 to 5 job right now. You know, they're getting up, they're having their breakfast, they're having their coffee to get ready to go to work. Some of you guys, you know, maybe got your daily goal and you're done. How many people can say that by 8 a.m. Eastern, that's it, you're done. You're ready to enjoy your entire Friday and get ready for the weekend. Not too many people can say that. So, you know, trading can be a blessing, but it can also be very, very, very difficult, okay? But these are the fruits of your labor, you know? These are the perks of trading, is that you could trade for 1 or 2 hours, hit a daily goal, and you're done. And then you have the entire day to do whatever you want, right? I would suggest, if you have any extra time, is maybe open up another business, do something to bring you an extra income in the family, unless you just want to enjoy the entire day off. That's up to you. I don't operate like that. Any extra free time, I'm always busy, I'm always looking to do other things. Utilize these markets to get what you need and get out, right? You don't want to sit here and stare at these computers, because then you're going to get migraine headaches all day. Okay, now again, we're barcoding now. Okay, where it's bearish, bullish, bearish, bullish. But again, let's see if the buyers can actually close above here. They came up there, rejected, back down. They came up there, they rejected back down and closing it low. Now it came really deep down into there at 36.45, closed again inside there. Again, it's opening bullish ignited. This is like another one of those. I could entertain a buy, but again, I don't want to, because I know how the market is moving. It could just come up, go, and then go back down. So I want full confirmation. Even if it does go up and it goes up bullish, I'd like to see the reaction, what it will get over at this yellow line. It could just come through there and get rejected back down. If they can come back up and close it above here, then I know then we're back into this zone, okay? The bigger one. And you see that again. They faked out those buyers, came back up, and right back down. So now we're literally barcoding. Bearish, bullish, bearish, bullish, bearish. This volume sucks right now, okay? And it's 8 a.m. and we got Comex in 20 minutes. Let's maybe continue watching and see how Comex market opens. Maybe Comex will return a lot of this back up. $100 pips is a weekly goal for some. Yeah, it could be. Some traders I know that are, I know it sounds crazy, but some traders target 20 pips a day, right? I know some professional traders that trade for 30 pips a day. 30 pips a day. I know someone's going to say, Ron, 30 pips is nothing. But these guys are trained for multiple years, and they have capital that 30 pips, if you just think about it, like a standard lot, that's pretty normal sizing for anybody, that with a bigger account, that would be $300 per day. Okay, that's a day's wage. That's a job for someone working 8 to 10 hours. 30 pips a day, 30. Like you can see, well, 30 is one candle. That could be about 300 US dollars. I'm just saying with a standard lot size. That, do the math. 3 times 5, 1,500 per week, 6,000 US dollars per month. That's how much someone makes working 40, 50, 60 hours a week for an entire month, okay? That's just with the standard size. But most professional traders looking for 30 pips use maybe double lots, 2.5 lots, and they're looking to make maybe $500-600 a day and make $10,000-20,000 a month just by looking for 30 pips. I know it sounds crazy, but that's how they trade. My goal is 50 pips a day, 50 to 100, and that's it. I used to catch more pips, but as my capital started to grow, my pips started to decrease. Because I don't want to be in these markets all day anymore. I've had enough of it. Okay, so that's a return candle. That's a nice return candle. Okay, I know some of you guys are going to say, Ron, I bought this. I understand it's very, very nice. I was itching to get in myself, but I'm going to wait for this thing to close. Okay, now we want to see where its neckline is. Will it be right here? Then we see one leg came down, came back up. Will it come back down? Will we have a double bottom, higher low? Will we get ready to cut through this trend line, maybe start to bring it back up? Or is this just going to come up and then they're going to return it back down with another leg coming down? But if you got that, congratulations on the quick buy. But remember, it's still trending down, okay? That's a nice counter move. But let's see where we'll close in the next 90 seconds. Again, then I'm just going to go through the motions. If it closes above this, this is going green. If it somehow manages to close above this, this one's turning green. If it closes above this, this is green. It closes inside here, this is still red. Okay, so if I'm just going to look at my spreads again. If I look to entertain another trade, just want to see what the spreads are at. This candle will close in 1 minute. Signal was updated here, guys, just so keep it on top of everything here for you guys. So there was that drop from 655 all the way down there, okay, to almost 90 to 100 pips, what we had measured. So if you guys got it when it came down all the way down there, fantastic. If you guys are still holding, let's see if it's a lower high and continue to push down. So you see how it came right in again, right to that red line, right? And they pushed it right back down. So 24 seconds, is it going to close back below that yellow line? Then we might have another bear candle coming right back down. Then we'll test for a second bottom down in here. Mahuth, what do I think about the Pandu meme coin? Think it will go run. I don't trade shit coins. I don't know. I'm the wrong person to ask. They're called shit coins for a reason. Most shit coins are down 95%. Those are pure pump and dump plays. Those are like hitting the lottery. I've traded a lot of penny stocks in my days, and they're just another penny stock. They're another shit coin. I don't focus on those. I focus on gold, US30, Nasdaq, stock markets, Tesla, Amazon, Google, Apple, Nvidia. I trade with real securities, not shitcoins. I could do some shitcoin analysis if you guys want, but I don't trade those things. It's like going to the casino and playing the penny slots. Okay, see the rejection right there? And then it starts coming down bearish. Notice how I flipped that zone green? Now we got to see, will it build a second bottom? So that's where it came down. If you were a buyer and you came back up perfectly, did you do anything at that red line? Probably not. And then you can see how it's coming back down. Okay, so will it break this? Will it hold this? If it holds this, then we could be coming right back up to test and break out of this. Maybe Comex will return some volume to the upside. However, this could just continue coming right back down, and we're going to maybe possibly continue to sell down with this. So you see how strong the sellers still are. They rejected it right there, exactly at 50% of that zone, pushed it down. Next candle, retested that yellow line. That's why I said, guys, that yellow line is very, very important. Sellers are still there, pushing this thing all the way right back down. Like, this is sometimes where I like to take an impulse sell because they pinned it and the way how it's pushing down, but I'll wait for this thing to close. So sellers are still in full control. If you are buying, the buyers are accumulating, but sellers are in full control. Fridays are kind of difficult days. If you get the wrong bias on a Friday, it could destroy you as a trader. So you kind of want to trade with the trend as much as possible until it ends, till the trend ends, okay? Just some friendly advice, because anytime you're countering, especially on a Friday, could be a disaster. So that's what I'm saying, guys. If you're accumulating on your counter trading, go in small, test things out, get your feet wet. If it doesn't go your way, you can easily get rid of them, take a minor minimal loss on your account, and then either trade back with the trend or wait for a better opportunity where bigger buyers are. That's it. Well, that's the secrets of trading. That's what kind of separates successful traders from unsuccessful traders. Successful traders know how to manipulate their orders. A lot of traders that are struggling just keep adding high leverage trades, counter trading, not knowing how to close out trades, and that's how it is, guys. Dave and I are also mentors here. We do a lot of one-on-ones with a lot of you guys. So, you know, I'm giving you guys feedback from what goes on in our one-on-ones. Is the majority of the one-on-ones are teaching traders how to fix their leverage, fix their lot sizing, and fix their bias, right? And how to utilize smaller trades when you're going against a trend to kind of speculate, to feel out things, and then to add with more confirmations once you have those, okay? That could right there change you. If you guys are listening to what I'm saying and you guys spend some time on thinking about this weekend, when you start next week, if you're having a really tough time, you're struggling as a trader, just listening to what I just said there could change the game for you. We've seen it, witness how we've changed lives in our group just by tweaking a few little things. It does take time. To learn, but you got to start learning at some time. I'm talking to traders that are struggling because I know that there's some on here that are struggling, right? You can't figure it out yet. It's still a work in progress. I'm not talking to you guys that are trading and doing really well. I'm talking to those that are struggling. We've all struggled at some point, and then how did we get out of it? We had to figure out something, okay? So you see that came back up with a wick, but it still closed. You know, it did engulf that blue candle. So now it's coming back down black and might continue to push back down. We're 10 minutes away from COMEX market. So that's just a heads up, guys. COMEX, you guys know, is commodities exchange open. There's going to be added volume entering into the market when that exchange opens up in 10 minutes. That could change momentum, that could change direction of the markets as well. So now I see it's building, it's barcoding, blue, black, blue. You know, if I take a trade on a barcoded pattern, I know, yes, it could possibly come right and then get rejected again. So kind of, I'd like to see if the buyers can close it above this red line. Like, that was a nice attempt where it got up there and then they rejected it right back down. This broke down, higher low, closed in the green zone. So now, like, if I was to trap all of this volume inside here, this would be where I would trap this, like right there. And yes, it could break out, build out of here, but why not just wait for closing volume? Why should we assume or have or just think or just guess that it's going to break out? Because remember, I took a trade right there and it didn't. Same with there. If you took that breakout trade, you got rejected and came all the way back down. Now it is building, okay? So this one possibly could break out of here. But again, if it does and I'm not in a trade, at least I can see where it closes. I can see relative to this daily point of interest. Is it closing above there? That gives me indication of maybe trend direction and who is stronger. So just analyzing the markets while you're not in trade also helps. I see a lot of traders today don't want to do this. They fail to do this. And yes, I know I might miss out on an impulse candle breaking out. I missed out on that one. I took that one and then I stopped out. So again, what if I take again another impulse candle that just breaks out, gets a wick and goes back down? Then then I'm gonna say, why didn't I just stick to my rules and wait for the candle to close? So you gotta now learn how to eliminate the would have, should have, could have game. The woulda, shoulda, coulda. If you're having difficulty with that, then the best solution to this is wait for the candle to close. We are on 5-minute candles. It's not a lot of time to wait for 5 minutes. We're already gone through half the candle. We have another 2.5 minutes to go. If you can't hold for 2.5 more minutes, then you shouldn't be watching 5-minute candles. You should be on the 1-minute singles. Okay, you should be on the 1 minutes. If you cannot hold up for 2 minutes or 3 minutes, then you should be trading these single bar 1-minute candles. These are made specifically for you. This is how I really love to trade. I love trading these things. Like if I was to buy out of this green zone on the 1 minute, as soon as it comes right up there, I'm out. That's it. 3 bars, 1 or 2 or 3 candles, grab 20 pips, 25 pips, out, right? If you're selling 1, 2, 3, 4 candles, you're in and out. If you're buying 1, 2, 3, 4 candles, you're out. Here, selling 1, 2, 3, 4, 5 candles, you're out. There's not just holding for, I want more, I want more, I want more. That's not the scalper's mindset. I'm sorry. Scalpers trade single bars or 2 or 3 maximum. That's it. And those ones are every 60 seconds. So as soon as you get in one, before you know it, you're going to start looking at that clock and it's down to 30 seconds. Then it's down to 10 seconds, then it closes, then a new one opens. And before you know it, that one has 30 seconds, then 20, then it's closed, And if you catch 2 of those bullish ones, that could be about 20 to 25 pips. Depending on the security trading, you could be out of the trade or stop loss to break even. And it goes the other way too. If you go in a 1-minute candle and then they go opposite from you and they go against you, you could be in that trade for 2 minutes and close it out. You're not there now to hold it for 20 or 30 or 40 minutes. You got to have a different mentality for those things. Every time frame has a style of trading. If you're on 1 minute, you got to be fast, you got to be furious, you got to be disciplined, you got to be focused. If you're on the 5 minutes, we're the same thing. These are fast, these are furious, but they're a little bit slower. If you're on the 15 minutes, those are more, you can take your time. You don't need to stress out like the way how we stress out on 1 minute. And then if you're an hourly trader, oh my goodness, you got all day to relax. You could go out and get lunch while you're watching the candle still build. You could go to the workout and come back in and you're still watching the candles. Okay, so here's the close. The volume is tested again, that trend line back above there. It's closing above that daily position. We're 5 minutes now away from COMEX market open. So if it does retrace back down, that looks like a big bullish engulfing candle. See how I just moved my cut line to represent about 50% of it if it comes back down in here. Okay, so now I see it's building. It's building nicely. It came down, stopped, coming back up. Okay, so now I just want to figure out where's this neckline, because it could come back down. What if it comes back down, hits that, and then there's the double bottom, and then we break out, right? It could start breaking out right now and making the neckline maybe like right where the red box is. So technically coming down, building back out of here. Right there might be the neckline. Then it might come back down here or retest that daily line, maybe retest this green zone, okay? And then we could look to buy off of that. If you want to go in like right now, again, just heads up, you are buying on an impulse and you're buying 4 minutes prior to COMEX market open, okay? So far now it's returning back up. And then what you can do with your fib tool right now, from where it started to fall, right there at 620, now we can see like the lowest point. So if you grab your Fibonacci tool from the highest point where it started, now we can see it. We're not guessing now, right there. And let me just flip it. reverse it, sorry. Okay, so there's the 618 right up there. There's the 0.5. You see how the 0.5 lines up right at the top of that box right there from where I just placed it. So we're trading right at 50% from this entire retracement. From where it's dropped all the way down there, there's the 0.5, exactly right at the top of the zone. Maybe that's where the neckline is going to be, okay? So that's what we got to watch for. That's why I said, if it comes up a little higher, the neckline could be right there, then they push it back down. And that's where we got to watch for where they pick it back up. So also make note that the opening day balance, the opening buyers are still, they protected it, right? Okay, that was the lowest point right there at 3645. And you see the opening balance is 3644, okay? So they're holding it, right? They're still there, holding strong. Okay, so it came back up impulsively, back up there, rejected it back down. 2 more minutes to go. Let's see where it closes, and then we are going into COMEX. Big shooting star candle, get rejected at your 200 EMA. Some of you guys are using these. There's the 9, the 200. Okay, see how there's now indecision prior to the COMEX market open in the next 90 seconds. So that was a very strong bullish candle that was coming out early. Got rejected right there, coming back down, bear volume. So let's see how it goes. We might have to continue selling down with this, right? JJ, we do take trades. Yes, I know it's your first time here. I'm analyzing, but we do take trades. Just join us a couple sessions and you'll see what we do here. Or watch a couple past lives. We do trade here. We don't just talk. We trade. But I'm trying to explain it's 25 seconds prior to COMEX market open. So it's probably not the best time to be taking a trade. If you want, go ahead. Because now volatility is going to increase. Okay, guys, here it is. A bullish ignited open. So it opens strong. So let's see if they can take out this high and just, break it through here with that strong opening candle. Let's see if it holds or it gets rejected, okay? So far it's holding that opening COMEX balance right now. First 20 seconds holding, ignited, pushing back up to that 200. But I want to see more at the top of the zone. They rejected it right there, okay? So this could turn bearish and just start dropping down and we're still below this red zone. So if we want to continue to sell, we're still selling with this higher time frame trend. So there it's coming back down. It's a shooting star candle. Okay, could be consolidating in here. Okay, came back up. Let's see if they push it back down one more time. Okay, there's a good push down. Okay, now it's getting to that daily level. Okay, back up. Let's see right there. One more push, back up. Okay, so it's coming back up. It triggered that daily area. Watch, okay, right there. I'm going to go into sell, okay? So I'm going to sell down with this volume, placing my stop loss up. I want to see if it can come back down, maybe towards that wick right there. Okay, so I'm going to sell. I liked how it retested, and I want to sell with the trend continuing to push down, right? So stop loss placement now. I want to know 50% of this bearish candle right there, above me, right there. So I want to make sure my stop is above 50% of that candle. I could even give it more room to breathe and just put it above SST's sell signal right up there, okay? So I'm looking for this thing to continue to come back down, maybe retest this red line and see if we can come back down to today's opening balance, okay? So I'm going to sell on gold. JJ, you there? So I'm on a sell on gold. Didn't take long, I told you. And if it comes down to that green box, about 20 pips right there with zero drawdown, okay, 20 pips down there. And if we can get it down to our red line target, it could be about 40 plus pips down in there, okay? But now we're trading into that prior green zone right there, okay? So let's see if we can cut through this. We've already got a wick, so there could be buyers that want to bring it right back up. But this is that COMEX volume. If it starts to break here 25, 30 pips, you can start to decrease your risk, right? If you're just looking for a scalp. Pretty quick, huh? all you had to do is tell me, okay guys, but let's follow where this thing closes. Because yes, it could just come in here. This green zone has been holding, so it could come right back up. But let's see if we can cut right through this and close below this. And then maybe we can invert this green zone red and then have one more push down and test today's opening balance. But out of COMEX, see how they brought it up to COMEX? I waited, saw it got rejected right there when it opened bullish and it started to come down. As soon as I broke that daily yellow line, I got in a sell right there. That's a nice move down through there. That's 25 pips, okay, with 90 seconds to go into the close. Some of you guys, if you want to reduce your risk, you can, right? Some of you guys I know are scalping for 20, 25 pips in and out or 80%. I didn't. Okay, I'm holding this thing. Let's see what happens. Okay, so that green box is still holding with 1 minute to go. One more minute to go. We don't have too much high impact news today at 8:30. Normally we have, it's just Canadian retail sales and core retail sales today. We don't have any US news. Man, it would be so nice if we can get bear volume bidding down here and closing below here. Bork, so what do you got? 36.46 to continue. Yep, right below there. Yeah. Let's see, guys. The closure will be, like if we can get sellers to bid down in here and close it to below here, we can invert this green zone red for the time being. Maybe have one more push for the next 5 minutes of COMEX until we get to 8:30. Be very nice if we can get one more push and close below here. Because if we close inside this green zone or above it, then the next bar is going to open bullish and come back to retest this location or back in this red zone. Okay. Here's the close. 3, 2, 1. So closed in the green zone, so it's still a green zone. Okay. And it just opened ignited bullish, so it's coming back up. If we can cut this in half, right? Where's 50% of it? It's right there. So if it does come all the way back up, at least we have a bearish point of control of this first 5 minute candle. Hopefully it's just a lower high and then they can continue to bid down in here and just start bringing it down. I don't want to bring out the magnet just yet. I want to see if we can close below here and then I'll bring out our SST indicator, our magnet indicator. Hopefully it's not reverse polarized and we can kind of bring it down to target. Yeah, let's bring it down. That's 30 pips down to there. I'm trying to pull it down, guys. I'm trying my hardest. I'll even attach it to the wick. it's tough, guys. I got the magnet out there too. Okay, remember this is like the opening day balance, so there's a lot of buyers in here. Okay, but if we can close below here, we could really cut through here and really cause this move to continue to push down. I can't stress that enough. closing volume. How important it is to close with some black volume below this green box, okay? Can't stress the importance of that. You'll see why. If we can close black below there, when I flip that red, you will see why. Okay, so we got 3 more minutes. You know, it's a ride. A candlestick is a ride. We opened right there. We came up bullish, went all the way down there, came back all the way back up. It was blue. Now we're coming all the way back down. Okay, so we got the selling pressure continuing to bid down near the low. But it's so important if I can close below here so I can flip this zone red, because then we can build offers off of that. You see, again, came back down there. It's coming right back up. Candle bar flipped again. So it turned into a bullish pin bar. Again, we haven't came all the way up here, but maybe this will be the push that comes all the way back up. Or we get a lower high push again. And see how the volume is just continuing to trade inside this green zone. So it's very important. Both sides can change this. Even if buyers are strong, they can close above here. Then we're going to come back up into test our higher time frame red zone and our daily point of interest. But it would be nice if sellers can just finish this off, close it below here, and then get ready for the next leg down. But buyers are still strong, okay? And we're going into 8:30. So 8:30 comes in. It's a new 30-minute candle. There's new momentum that comes into the market. This is now making the double bottom on these 5 minutes. So if you look at this, I know some of you guys are buying too. There, that's the second bottom right there. Could still be holding and building back up. And then you can see we're in sells. But if you're buying, I kind of want to maybe see it come back in here and then maybe push back down again at a higher time frame up in here, okay? I'm on a sell. Yep, we're selling. We want to continue to trade with this trend, lower lows, lower highs. COMEX pushed it down nicely, but buyers are bringing it right back up. But again, it comes down to closing price. You know, it's back to a spin top candle with indecision with 1 more minute to go. So anyone can close this out. Now we're right back to the opening balance. Remember when it opened, it was bullish, came all the way back down, came back up bullish, came back down, came all the way back up. Sellers just pushed it back down. Now we have 50 seconds to go. It might close exactly virtually where it opened in this green zone. Then another bar will open up blue and maybe come back up unless sellers can close it. And then we get another push down. But if we can close below here, I'm going to flip that zone red and illustrate that it could be where sellers are positioning themselves. Okay, so comes down to the close of the candles, guys. Unfortunately, I can't move the markets. I wish I could. I'm trying to move them with our magnet over here. Hopefully the magnet can pull it down. Should I bring out 2 magnets? Should I bring out the double magnet? A pancake, yeah? I don't want to look at a pancake because I'm hungry. Okay, look, it closed below. We opened the ignited bearish right away. Watch. Okay, so it closed below. Look how it just opened ignited bearish and just dropped. Now it's coming back up. Let's see if it will hold. No, we lost our ignited head, so now it will retest the zone right here. Let's see if we get a lower high wick. Okay, but we got a red zone. So let's see now if the sellers will offer to these buyers and keep it down. That's a strong bullish candle coming in, okay? You saw how they closed below and it opened bearish ignited and just dropped, but as soon as it dropped, buyers are coming right back in. So now it's transacting inside here. Let's see. This is 8:32. So this is the new 30-minute candle. That's why it kind of closed and open like that. It's with momentum of a higher time frame, okay? I know the other 5-minute candles were fun to watch, but this is an 8:30 candle. This is now a 30-minute candle with a higher time frame. That's why it kind of last second closed below there and then went back up. That's the volume that's transacting on the new 30-minute candle, okay? So it did come up. We do have a lower high so far. They did push it back down to the opening balance. So let's see now if we can just continue to bid down the wick and just drop it down to this location. This location, that red line is that last low, okay? And then there's the opening day's balance. We're not too far away from it. Okay, but buyers are going to try everything in their power now to protect this area, because that is protecting today's opening day's balance, right? I know we're just scalping 5-minute candles, but how important is that opening day balance? That could flip today's entire daily bar into a bearish candle. And this could also, for buyers, could hold that position and bring it right back up. So you see how it's developing a double bottom right now? This is going to be a tug of war between buyers and sellers. Who's going to win this out? There's your double bottom. There's the neckline. If they close it above there, it could retest this. Then yes, it's coming after my stop loss up there. And then the whole trend can reverse, all because of where we are at this opening day balance. So now half of the candle is exhausted. 2.5 minutes have expired. We have another 2.5 minutes to go. You see, we opened, we came down bearish, came all the way back up bullish. The volume is right here again. It's going to depend on how and where the candle closes in the next 2 minutes. I didn't take out anything down there. I didn't reduce my stop loss. Nothing as of yet. Okay, it might be my mistake. Maybe it will come back and haunt me, but I didn't do anything, so now I just got to continue to watch how and where the bodies close. We're going to do Nasdaq and US30 also, guys. So we'll stick with gold for maybe another 10 more minutes. And then we're going to do some analysis on US30 and Nasdaq and see how they're going to, we'll do a top down, see how they're moving going into Wall Street in the next 1 hour. Okay, so now we have 60 more seconds. This candle volume is representing the first 5 minutes of our new 30-minute candle that just opened up at 8:30. Showing bullish volume, representing a double bottom down in here. But we're going to continue to rely on the higher time frame trend, which is bearish currently. Okay, so this is the last 20 seconds, very important. See how the buyers brought it up, they rejected it. Where will this close? If it closes above this red zone, again, I just go red to green. I give respect to the buyers. If it closes inside, it's still red. If the sellers can close below there, even better for us in sells. Okay, so here's the close. Right above the zone, so I gotta go green. Gotta just continue to stay disciplined with the structure. Okay, so it did close above. That candle did open bearish ignited, did push down, but got a quick wick in the now green zone. So if buyers are holding it, they could continue to fill that wick and then test 50% of that big bearish candle that opened at 820. That's COMEX. That's representing 50% of COMEX right there. So let's see, maybe if sellers can continue to bid down in here again to get it to close back below there, because right now there is buyers in the market interested in buying in this block. Okay, so you see, guys, doesn't surprise me now. When you flip that box, green, buyers. Second bottom, there's your W, okay? So it came down. There's the big neckline that started at COMEX, that big 820 candle. And that's exactly 50% of that bigger zone up there. And then we came all the way down. There's your second bottom, higher, low, higher, low. So I couldn't get that break I was looking for all the way down there. Buyers are protecting it and coming all the way back up. So this is building, the second leg. When I always say second leg traditionally has more volume to continue breakout, but we still got rejected. So that's perfect. So it's showing me the second leg, if it loses this strength right there, then we could continue selling all the way down there, okay? If this second leg is showing us that the sellers are holding them down, then we could continue trending down, and hopefully we can close below here. We can make that a red block, and then we could really push down here and then take and test today's opening day balance, okay? So remember, I always say the second leg traditionally has the powerful leg. If they can hold it down, the second leg, then we could continue to trend down, okay? So this is the big fight right here. It could dictate where the development of this block takes us. It could definitely go up bullish, but sellers are right there. See how they're holding it down? That was a nice big bearish candle that came down, but look at the green zone, the bottom, the depth of the market, they bought it right back up. So this is where we are now consolidating. Do you guys understand? Like sometimes I say things and I don't know if you guys understand what I said. Do you guys know what I mean by the second leg is traditionally the stronger leg? And if it's holding it down, it shows how strong the sellers are, okay? That's a clear example right there. It's a live example. It's easy to say this and when we're just talking about it and reviewing, but there's a live example right there where I just showed you guys. Like this is, you can clearly see it's a double bottom. There's our neckline. This is the second bottom. Second bottom, traditionally, I always say, has the bigger volume to continue to break this and drive, right? If the sellers are holding it down, then it could signal that we might get that next leg pushing back down. But see the big fight between the buyers and the sellers here. Even sellers were strong. They got it all the way down there. But when it got down there, those buyers are just continue to buy it. So the daily opening balance is holding strong. They're protecting this right now from collapsing. Okay. Now we got a minute 20. We got to watch the close. Again, the sellers are bringing it right back down. So if we can close down in here strong, we'll make that green zone back to red and continue to extend it into the future. Maybe we can build off of it. Maybe if it comes down here and comes back up, we're retesting it and it's now supplying the market and we're continuing to push down, guys, okay? So we're still in profit, like I'm still in profit, but we're looking for a bigger move, guys. We're looking to see maybe if we can come down here to that low, maybe break it and then get to today's opening balance, okay? Guys, if you guys can leave us a like on YouTube while we're in this trade, we have 618 viewers. That's a sign, 618, That's a Fibonacci ratio, one of the most important one. That's the golden line and part of the golden zone, the 618, the 618. I don't know. I keep getting messages, these numbers, spiritual numbers. If you guys can hit the likes, we do appreciate it. Subscribe to the channel. We do appreciate it, guys, okay? Let's watch where this bar will close. Very, very, very interesting bar here. 10 more seconds to go on the close. Again, I can't stress the importance how big it would be if we can close below here. Because if we close inside, it's still a green zone. I'm a very technical trader. See how I won't change it? It closed inside, that candle opened, ignited blue. So it's showing me the buyers want to continue. They're still in here, okay? So now we've got to test 50% of that bearish candle right there, and they rejected it. So this could be like an impulse move breaking down again, an impulse bearish move, but nothing is confirmed until we get closing volume. So I hope, for the sake, I'm going to sell. I would love if this is an impulse candle breaking down bearish, right? When you're already in a trade, you would love for an impulse break, but see how strong it still is? Green zone has not broke down. Bar coding in here. Wow. Like it would mean so much if we can close below here. If they can bid down here, that will interrupt the algorithm and the depth of market. That could bring, like see this block up here? It's holding with strong offers. This one is kind of just being traded right now. It's transacting. If we can close below here, then a lot of these pending orders will get pulled from up here and start offering in this zone. See, the more it holds, then these daily buyers down here at the opening balance, they're taking their asking price and they're canceling it from here and probably pending inside here because they don't want this zone to break. So they're putting all of their buy orders inside here to continue to bring it back up here without coming down here, right? So this is the war right here. This is the fight in this zone. This is going to dictate whether this breaks down bearish or it comes back up bullish. Okay, this zone right here. You can even mark it on your charts from 3648 to 3647. Like it's very, very small zone. But there's our bearish shooting star candle. Okay, we got it. So it came back up. Still sellers are holding it. Now we got wicks to fill. This one, this one, this one. Can we fill those wicks? The reason why I have this white line, this red line here is because that's representing the lowest point we dropped. Okay, so I'm looking if it comes down there, will it be equal bottom lows? Will it be like a higher low there? Or will it break for that new lower low? Okay. Ultimately, we need bear volume to close below here. Okay. I know it's nice right now dropping, but it could just come down and go right back up, just like it did here, 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 and here. That's why we got to close with conviction below here to trap all of these buyers and move the market away from them. Because the further we diverge away from the buyers, the more you and I make in profit, right? We want to come after their stop losses. They tried to come after our stop losses up here. So this is welcome to the world of trading. It's a game of going after each other's liquidity. And now we have 2 more minutes to go into the close. See that, those nasty wicks? But if we can close below with some volume, then I'll flip that green zone red, and that's a block we could continue to offer. Okay, guys, if you're still looking at like profit-wise, coming down there should be about 30 pips. You know, if you want to go reduce your risk, you're welcome to. Okay, fills that wick 30, 34, 35. Down there's measured 43 pips from entry. Remember we took it right off of COMEX. Okay, 1 more minute to go into the close. Again, I sound like a broken record. I can't stress the importance of closing below here. You see that's a nasty another wick coming right back up, close in here, and guess what? Then it will start the next candle back up bullish. Then we're playing this ping pong game. So that's why just close it down there with conviction, flip the zone, and let's push down. So we can get on to move our new charts, and 8:45 is going to open in 30 seconds. So you have a new 15-minute bar as well. Look at the 15-minute bar. Like it's got that big engulfing bar preceding, came back up bullish. We sold off of there, coming down, but look at the 15-minute volume. Can we continue closing near the lows and one more push down maybe the next 15 minutes, target that opening day balance? 10 seconds going to close. So I'm just going to go through my motions again. If it closes below, green box, I go red, right? If it closes inside, it's still green. If it closes above, it is green. Here's the close below, red box. Okay, now look for the candle opening bullish. Will it come all the way back up into the red zone or just 50% of that bearish candle right there? Okay. Or just see how it says small doji? They held it down. They're pushing it down. Do we have enough bids on this candle, new 15-minute candle, to just attempt to take out those 2 tweezer bottom lows? That wick and that wick are tweezer bottoms. They're equal right there. Here we come down. Let's see if we can take out my dotted line, my cursor, if we can create that low and just drop a little bit further down, okay? Still holding these wicks. Okay, but that's about 30 pips in profit, guys. Okay, I'm going to reduce my stop loss. See where I was all the way up there. I'm just going to bring it now down to this block. Okay, so I've reduced my stop loss while I'm up 25, 30 pips. My stop was up there. Okay, I know it was a high stop loss, but I've just reduced it by 35 pips. Okay, so I've eliminated risk while I'm in profit. Okay, I'm not at a break even as of yet. If we can take out this red line right there and go above 40 pips, I will go down to a break even. Not there yet. Now you see how it's coming back up bullish. Retested our red zone. Red zone is showing offers. They're there. They got triggered. That's what produces a wick on a candle. So now can we push the volume back down to the opening balance of this candle? We absorbed all of those initial buyers. We offered to them. That's perfect. That's what you want to do as a seller, is offer more and more and more to your buyers, right? Simple game of supply and demand. There's currently more supply in the market than there is demand. And now the market can push to take out the new low with the added offers that just accumulated. So let's see if they have enough to redistribute that delta sell side volume to take out these lows and drop even further. That's a beautiful shooting star candle. That's what we want as sellers, right? Can we just bring it down with the magnet and get it to where we need to go? So I'm just verbally letting you guys know ahead of time because I know there's a delay on YouTube. If it comes and touches this red line, I'm going to a break even and will be taking out 80% of my trade, okay? I'm verbally telling you guys ahead of time, okay? So it's not delayed. I'm going to do something at this red line, okay? Double the magnet. I hope these are not reverse polarized magnets, or else we're going to be in big trouble. Maybe we'll put a pancake down there too, so we can eat. That's where we're going to eat. Come on, because we're hungry. We got to eat down here. Come down here. Come right down to the pancake. And so we can eat a little something down here. Okay, so we got a bearish shooting star. Again, remember, it came down nicely. It was spin top, bearish spin top. It was. Came back in, pushed back down. Okay, it's okay. If we're consolidating still below the red zone, that's great. You know, we could be building, you know, a flag, a bear flag, continue consolidate, and then get that next push down, right down to our breakfast. Come on down. Okay, and there will be something done at that red line. Regarding me, we'll be going to a break even and taking out 80%, leaving 20% running with break even. Because it is 10 more minutes to 9 and we got to do US30 and Nasdaq some analysis. Okay, guys? If you're happy, guys, and you want to grab some money out, that's 35 pips right now. Down there measured is about 43. If you can break 45 to 50. And don't forget that yellow line down there at 3644. That's opening day balance from today's daily candle. Yep, Rob, we're trading with magnets and pancakes. You got it. Yep, we're crazy traders. We trade with emojis. That's the way how we trade here. These are the newest indicators. Each one of these indicators is $1,000. But if you buy today, I'll give it to you for free. Free Fridays. Okay, look, ignited, nice candle, pushing down, taking out the low. Come on down to our pancake. Am I getting greedy for a few more pips? You know, maybe the market will, you know, teach us a lesson down here. But let's see. Come on down with this volume. Let's go. There's 40 pips. There we go. Target. Okay. You guys heard me verbally. 80% out and 20% break even. Beautiful. I got to eat, right? Oh, right into the pancake. Right in there. Wow. Could come down to that opening day balance, guys. That's 55 pips. Holy, I'll be eating more than a pancake today if it comes down in there. Wow. Put some popcorn down there too. Okay, guys, please do something on that trade, okay? At that red line is where I told you I'm doing everything, okay? So I went down to 80%, down to a break even. Sorry, guys, I trade off my mobile. Break even is in the market, and when it came down there, I collected 80% taken out. I have 20% running. If it can come all the way down to that opening balance, perfect. If not, I still took out some money, okay? So, guys, just a quick little recap of that trade. We waited for it to pull back up, okay? Remember, the market was trending down. Trade with the trend. The trend is your friend. It came back up. There was COMEX right there, 820. As soon as I saw it come up and get that rejection right there and coming down to that daily right there, I went in on an impulse, but it was with the COMEX volume. I saw what it did up there. I went in, placed my stop loss. I had my original stop loss above here from our previous SST sell. Had it up there. I know it's a high stop loss. I could have just got away with placing it at this block, but I want to teach you guys, if you allow it more room to breathe, you don't need to panic when you're in a trade. And then it came down, again, it came back up. We trusted our trend line, we trusted our zone. Here, kind of had a battle between this green box, red box, but the red volume continued, sellers continue to push it back down. So guys, you see how it came all the way down, bearish all the way down there. That's why, look, just a few points. Look at 50 cents off of the opening day balance, and look at it go back up. That's why you don't mess around with the opening day balances, guys. I always tell you, these are big, big points of interest. The opening, the close, very, very important, okay? So hopefully you guys took some out. If you didn't, maybe you should all have reduced your risk, okay? So I have a hard stop at right there at my entry with the 20% because I'm going to go on to Nasdaq and US30, okay? So if it comes back up there, my 20% is out, but I break even, but I've got my money, okay? So I hope you guys learned from that. Let's continue moving forward. If you guys want, you clean up your charts, and we're going to move over to Nasdaq and US30, okay, guys? So if you guys can leave us a like on YouTube, we do appreciate it. If you guys had some fun, you learned about that trade. And also, guys, if you're new to the channel, subscribe. Let's hopefully get this up close to 86,000. I asked you guys if we can get this to 86,000 today. I will come in on Monday night after I come back from Chicago, and we'll do a swing trade session where we'll do some securities from the monthly analysis, weekly, and the daily, and we'll look for some swing setups on the 4 hours throughout that week, okay? I know it's a big target, but it's up to you guys. If we can get those subs in there to 86,000. We're here for another hour. I don't know if it will happen, but we'll see. Okay, guys? So I'm going to move off of gold. I trust you guys can all analyze this and, you know, use your own risk management and trade management. Okay, I got to go on now. I got to do US30 and Nasdaq because we are 35 minutes away from Wall Street market open, and we got to get ready to analyze. So let's start off with Dow Jones US30. We're going to start off on the daily. Okay, let's see how everything is looking on the daily. Remember, you want to focus on higher time frames at all costs. Even if you are a 1 minute, 5 minute scalper like myself, you still got to focus on your daily points of interest, right? You can literally maybe find 1 minute candles that will bounce out of these nice zones, and you can find some nice scalps with minimal to zero drawdown, okay? How do we go about this? How do we do this? Number one, what are we doing? Okay, it's in a big uptrend, okay? You can see it's trending up all the way, all-time highs, but key zones, okay, this is going to become very repetitive because we've been looking at this since December of 2024. There was a pivot in the market, and it moved into there February of 2025 this year. Second top, drop, okay, just like following any pattern recognition, it came in, started to move down, second top, and then they dropped it back down. Val, have a great day at work. Thank you for joining us all week. Have a fantastic Friday, Val, and we'll see you Monday morning. Thank you, and have a great weekend, Val. I do appreciate you. Have a nice day at work. Hopefully soon, Val, we're going to get you out of that work. Slowly. Take your time. We're going to get you out of there. Guys, there's nothing wrong with going to work, okay? You know, some people got to work to pay the bills, trade on the side to grow their accounts. It's normal. If you're just trading and you're not working, it could add a lot of stress to yourself as a trader because you might have the pressures of paying your bills, paying your mortgage, buying groceries, buying your kids' clothes for school, all of those things. So I'm not knocking that. I'm not one of those guys that says let's all quit our jobs and just trade. No way. I encourage you guys to work while you're trading, while you're learning, because while you're at work, you can pay your mortgage, you can pay your bills, you can pay your debt, okay, with your work. Plus you got a pension, you can build off of that too, okay? There's nothing wrong with that. A lot of traders balance work and trading, okay? So if you can do that and you can trade while you're working, come in a couple hours before your shift, trade, look for a target, get your daily goal and get out and go to work and keep compounding that for a couple of years. And then you're also back testing yourself. If you ever do want to quit work, then you've already shown yourself that you can do this on a daily basis. You don't want to just trade one day and then quit your job and say that's it, because trading takes years. Some traders take 5-10 years. So I don't recommend anyone quitting their jobs. Depends what stage you are in life as well, okay? Everyone has different situations. Everyone's different, but you can learn. I want to be there to tell even students at school, guys, I was trading in university. I was trading in high school. I was in school and I graduated with honors in university. I want to tell you guys that it can be done. Okay, don't quit school just to start trading. I know it's a big thing now. I see it on TikTok. Everyone says school is a joke and let's just start trading. Your uncle's not giving you that advice. No way. School is very, very important. Okay, for other things you want to do in life. Okay, it's not for everybody. I will be honest. School's not for everybody, but don't just give up on school. Okay, because trading is not easy, guys. It's very, very difficult. Okay, sorry. I don't want to take too much time. I want to get back to this. Okay, so do you guys understand why I flipped that zone green right there? 50%. There's my daily yellow line. I on every single call, guys, I'm telling you, I always have an alert in here. US30 is nowhere in dropping all the way down into here. So we can just acknowledge it. I want you guys learning what I'm doing too. I can see another zone real easy, guys. It's easy on the eyes. This big blue candle that closed above that entire zone was day 2 of the Jackson Hole Symposium, where Powell hinted at the interest rate cuts that we saw on Wednesday this week, and the market pumped up with that. See right there where it closed? Next day it opened right there. Then I see an impulse, and then finally we had a big day, Thursday, September 11 on news. And then you see the wick, and a wick, and a wick. There's your zone, guys. It's very easy to spot this when you know exactly what you're looking for. That was a red zone at that time, right? You could have had it red. Then I see it came in, back down, came in, back down, came in, back down. This body closed above. As soon as the body closed above, we did it just now on gold, on that sell. Green to red, red to green. Let the volume prove to you who is winning it. So you can do it on a daily, right there. If you did it on daily, that bar did close above. Go green, stretch it in the future. Now I can see on Tuesday, we came in here, closed right at the green zone. Yes, Wednesday was FOMC. We came in here and closed above, okay? So this is still a green block in the market. Now you see where my red line or yellow line is, right at those points of interest. Now I can just manipulate it myself, bring it into 50%, 45,710, place an alert in there. So now you see I have an alert at this block in the market. I've got an alert at this block in the market. Obviously this one is deeper, a bigger depth of market. You know when you go fishing, okay, this might be 20 feet of water. This is where maybe you got some little perch in here, just some little guys, some little fish are in here waiting. Not that big guy, but the little ones. Oh, that one went upside down, okay? So you got maybe a couple little fish in here. You know, if the market comes in here, definitely we can hook one of these and go back up. But the bigger fish, like if you go fishing, guys, and you have a boat and you got a fish finder and you find the big fish, they're probably swimming in the deeper waters, okay? So if the market ever comes back down into here, that's where the big guys are. Those are the big lake trouts. Those are the big pickerels. Those are the trophy fish. Those are the ones you hang on your wall right there. those guys are waiting in here. Deeper depth of market, bigger buyers. Consider it like bigger institutional traders in there, okay? Use these silly fish analogies if you have to, okay? Right now, the fish are still swimming. No one is offering any bait to them because we're fishing all the way up here. Now we're in new charted territory. This is all-time highs. So this is depth of market. This is fishing sea we've never, ocean, lake that we've never fished before, okay? So you know when you go to a new fishing spot, any fishers in the group, any fishermen, you know when you go somewhere new, you don't know about the lake, you don't know about where you're fishing, you got to kind of feel it out, go to different locations, see where the fish are. That's what is going on right now. So this is price discovery, all-time highs. So we can definitely know exactly our all-time high for US 30s right there, 46,355. We did hit it on Thursday, the day after FOMC. Came up, hit it, okay? So right now, do we have some points of interest right there? This big body candle closed right there. Let's place a yellow line right there, right? Let's just continue looking for pivots. It pivoted and came back down into the zone. We came back up. There was FOMC impulse break, came back and closed right there. Are we still above 50% of our FOMC candle? Yes. Right there. There's 50%. That's me guessing. 45,899. See how close I was to that psychological number? 45,800. That's me guessing that that's half. We don't need to guess. Grab your Fibonacci tool, opening balance, closing balance, right on, right at 50%, exactly, 45,900. If you want to find the point of control from FOMC, very easy. There it is. There's your bullish point of control. Stretch it across. We still haven't transacted in the point of control from FOMC. We came very close yesterday. Look at yesterday's low. Unfortunately, I didn't trade with you guys yesterday, but had I did, you know, it was bearish, 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 came back up and did not transact in here. Again, if you want to add one more alert in that zone, just continue to populate your chart with alerts. And if it comes in there, then you trade accordingly, okay? Because it could pull back inside back into the FOMC point of control and go back up. If it closes below, we make it red, and then we could be coming back down in here, right? We take it one block to the next block, right? That's how markets move, guys. You guys think a market just moves on a candlestick? No, markets move from blocks. Like when we're talking now bigger perspective, look at how the market moved from this big block, moved to that block, came back into this block, went back up to here, came into this block. Now it could be finding a new block, new all-time high. But if ever it comes back, maybe attempt to this block, or that block. The markets move in blocks, if you want to consider it that way, okay? Now, let's kind of figure out yesterday's volume. Just a recap, because I wasn't with you guys yesterday. We opened. It was initially bearish, above 50% of the point of control from FOMC, still holding, came back up to the opening balance. Look how bullish it was, because look at the FOMC wick that was left behind. And yesterday it filled, it came all the way. That's yesterday's high. That's fresh in the market. Let's mark it, right, with a point of interest, 46,260, because we're not too far away from coming back up there. And then that shows me how strong we were. We got the all-time high, but then they got rejected and closed right there. So our closing balance yesterday and opening balance is right there today. Now let's follow today's opening candle. We opened, it was initially bearish. It was bearish, bearish, bearish. Notice that yellow line where I got from that body and that body is exactly 50% of yesterday's volume, okay? Remember, I did this ahead of time. I placed that yellow line at that body and that body. And then now look at yesterday's volume from the open to the close. I guarantee you that's 50%. You don't believe me? Grab your Fibonacci tool. Let the mathematics answer the question for you, not me. Look at right there. Right at 0.5 basically. Now I can just manipulate it myself right in there. I can find yesterday's point of control right there. And then now I can see what happened today. It came bearish, 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 bearish right into that point of control, broke it, bearish, bearish, bearish. There's my low of the day. But when it came down there, I'm asking you, is today's low of the day higher than the opening day, previous day balance? Yes, it is. So they're still protecting that. Buyers are there, brought it right back up, cut right through that zone. They came to the opening balance. They flipped the candle because we already have a high wick. So it is a bullish pin bar where we're trading right at the highest point of the day with this volume. So is Wall Street going to explode and break out and fill that all-time high wick, or are they going to manage to bring this back down to the opening balance and bring it down with selling volume? If we sell, we could be coming in at the top of the green box, right in the middle, or right there, because then it could go back up. If we lose this green box, then we're not too far away from the lowest point of the day where the candle could flip and sell on a Friday. But right now, it's very, very strong. It's a daily pin bar, bullish pin bar, almost a hammer candle ready to break out. So let's go to the 4 hour. Look at the 4 hour candles, okay? So we got big moves. This was that crazy FOMC. Remember how erratic it was? This is basically representing the first couple minutes, you know, how high and how low it went. But after the noise, you know, when the market settles down, you see we came up. I see when we hit the all-time high was Thursday. This was the European candle, 2 to 6 a.m. And then I see how yesterday, 6 to 10 was bearish. Then we came back up, but it's lower highs. We pushed down. Here's Europe. From today, okay, 2 to 6 a.m. So I see Europe opened. It was initially bullish, traded into just under 50% of the previous 4 hour candle. All candlesticks are the same shit, guys, okay? Then it was bearish, came all the way down. I see we made our lowest point of the day during Europe and came right back up and closed above. Now I can see right now, 6 to 10. This candle is going to close in 53 minutes. It opened, tested in here, bullish. Look at it. We're attempting the highest point of the day and could technically break out to 4 hour interest. Where do I have 4 hour interest? Just, I want to know, because if it's coming up today, and it trades all the way very bullish, maybe they want to protect this all-time high right there is where I can see that they would push it down. I'm not guessing right there. What I'm looking at is that 4 hour body and that 4 hour body. So anytime I'm doing analysis on the hourly 1H or 4H, I use a white line. The white line will always let me know if it gets up there. I know where I got this from. I got it from a 4 hour or 1 hour chart. And right there, then you can see the all-time high wick. There's where you can have a red all-time high supply zone right down to those bodies stretched in the future, make it red. So if it does come in here, just know that you're trading in the double top all-time high, okay? That's where it could come up and then they start dropping it down, okay? That could happen today or next week. Let's keep an eye on that. But also, I want to be a realist. I don't want to just be telling you that it comes up there like this is a double move like that, and then you got to break this neckline and drop, right? But it could also do this. Could break out of there, create a new all-time high. If that's the case, this red zone goes to green, and then your next move would be kind of coming back down, retesting this, and then they drive it back up, right? So that's where your block flips. But in the meantime, we do have to consider that to be a double top all-time high supply by making it red, okay? Sorry guys, this is I missed yesterday, so I really want to just talk about these zones. And now we're moving up on this 4 hour candle. Let's go to 1 hour. Now we can start to dissect 1 hour. Okay, I can see the move on Thursday I missed yesterday in the markets. I can see when we came up, back down. Now it's coming right back up. 3 a.m. There's London. 4 a.m. 5 a.m., 6 a.m., big moves, 7 a.m., 8 a.m., 9 a.m. We're testing the highest point of the day, 20 minutes right prior to Wall Street. So what are they doing? Are they going to bring it all the way back up and slam it down? Look at this. This is an hourly double bottom, okay? Train your eyes to see this. There's the one bottom with a liquidity grab. Okay, look at where the volume closed in the green box. Coming back up, our neckline is right around here, purple, yellow line. If you want to make your neckline like right here, there's where it is. And then we came back down. Second leg with the liquidity grab. And look at where it closed. All the volume in the green box. There's our second leg coming up. Remember what I always say? Traditionally, the second leg has more power to break through this. And we're walking into Wall Street. So Wall Street might explode this move and come all the way through here, okay? Unless they do something and they manipulate the market and they slam it down. Okay, I've seen that happen. But right now, this is the second leg on the hourly, continue push up. So we're right at the highest point of the day. Look at it on the 5 minutes. Here it is on the 5 minutes, coming all the way up. Now, do I have 5 minute structure? Look right there. There was a double top on the 5 minutes. It came up, pivoted back down, came out, second top, dropped in this box. They held it back up. There's your bar that closed above, retest of it. You could have bought right there. If you were trading at 8 a.m. and you were following this, it's continuing to go up, higher highs. Look how it's respecting now our yellow line and continuing now right up to the highest point of the day. I know that this yellow line is a daily point of interest, and then there's our all-time high and our supply zone, okay? If you look on the 5-minute candles, it is technically getting to some overbought area, but they could have a Wall Street squeeze and blow right through this area. If it does start to sell off, look at this big body candle right here. Can we figure out where 50% of that is? Yeah, it's right there. Can we maybe figure out a zone out of that big body candle? It was 8:55 going into 9 a.m. right there. There it is. So that would be representing a bullish point of control. If it comes in back, if it pulls back into here, we'll see if this zone holds with buyers, and maybe we can buy a pullback out of here. If this block can't hold anymore, then it might turn to a supply block. Like for example, let's say it's right coming up right now, coming up into here, comes back down. We'll see. Is that going to be the neckline? Take it back up. When it comes back up, will it break out? Will it be like a second top? Then there's your M. Could do something like this, and then you stretch it into the future when it closes below and make it red. But that could be a good location to see what will happen today in Wall Street right there. That could dictate the way we move. Right now it's extremely bullish, okay? You don't even need a trend line. You can see how it's just moving up, higher highs and higher lows all day. If you need to make a trend line, I know it's going to be a trend line that looks like this, okay? If you need to make the trend line, you got it. Okay, right there. That's what I'm saying. If it can break that, that is where you can drop today. Okay, so it's very, very strong right now. We'll complement our chart with our SST daily bar indicator. Look at our daily bar indicator. Opening price was bearish all day. They brought it all back up to the opening balance. We're trading at the highest point now. So it's a strong daily candle that could continue to drive, okay? EMA, we're definitely above the EMA 9, and we're above the EMA 200, okay? So we're almost 9:15, guys. There is US 30. I will leave US 30 to the left of our chart. We will revisit this in a moment. I'll do Nasdaq. Let's just briefly look at gold. See gold, guys? That's why if you don't do anything, all the way down there, it came back down, okay? Look at gold, how it came right up there. Again, it came all the way back down to that opening balance. Look at now the results. Okay, they took out the opening balance. That's a liquidity grab on the opening balance. And then look at how bullish ignited 910 coming all the way back up. So this is where now gold could start to turn really, really bullish. Okay, so that trade, got stopped out. But if you are continuing to watch gold, you got to really watch. Will the volume close above? Flip this green. Will it build off of this and go? Okay, so that's for the gold traders. Nasdaq now. Let's do Nasdaq. Okay, so quickly on Nasdaq. Back to the daily. I want to do this one quicker because I know if any of you guys got to take a break, I want to get this done. Okay, so there's that double top, all-time high, previous all-time high supply. Reason why I talk about this every single day, I know we're nowhere near this. I want you guys to understand. You can clearly see how it came up, back down, came in, back down. Stretch it into the future. There's where the bars closed above. Get in the habit of making it green, stretching into the future. We're nowhere near 22,000 to buy Nasdaq. But again, you could go through what I just did with US 30. Draw a yellow line halfway, put an alert. I'm not going to do it because we got to continue going. But there's now, let's look at pivot points, okay? Pivots now. Train your eyes to look for pivots. Where the market comes right up to a point and then it just stops, okay? Right there. I don't think we have to kind of get into a debate about this. I can see it coming all the way back up and it just stopped right there. Reason why I'm picking this pivot point, because we can already see price action. We can see what happened here. Someone will say, Ron, why didn't you get this pivot point right here? That's a pivot point, came up and just stopped there. Again, this is too far back in the past. I like this one. This one made a bigger move. Came up there and look at the response. Those two big bearish candles dropped down. Okay, this is more consolidating volume right there. And then you see how it stopped stopped right there, and then it came right back up real nice and bullish. So those are two nice points of interest. And then we came back up. That was a previous all-time high just a few weeks ago, mid-August. And then you see where it kind of closed at those bodies. Another pivot point. Then we dropped all the way down right there. Did we come all the way down to this yellow line? No. There's a pivot point right there at those bodies. And this is how you can identify zones. I've been talking about this all week, guys. You know, some of you guys are here to learn. I know some of you guys are here just for signals, but others are here to learn. And I'm here to teach the ones that want to learn. I'm not too big on signals and just run, are you buying or selling? I'll trade with you guys live all day. I don't care about that. I want you guys to learn how you guys can do this, because if we're not here, you guys can do this. Just like yesterday. I wasn't here. I hope you guys could do your trading without me. Right there, you see what my eyes are looking at? That consolidated volume right there. You can now bring it into the future. You can clearly see now. This is where someone says, Ron, this is easy. Because I can see this. Exactly. That's what I'm trying to tell you guys. You got to base your analysis off of shit that already happened. Candlesticks, price action. When you're a price action trader, candlesticks tell you a story. It's a language. If you can learn the language, what happened in the past, we know where it's trading right now in the present, and we can predict with high probability where it will go in the future. So I want you guys to literally say, Ron, this looks easy. I'm not trying to trick you guys. Sometimes I know someone said, Ron, are you trying to trick us? Are you like, why are you doing this? No, I'm trying to train you to look what to see. How can we not see that? Where it came down, went back up, came down, back up, came down, back up, came down, back up. And then you see that blue volume, it's right there. So you see how I trap it, get that wick? This is the point now, what I'm trying to make. Stretch it into the future. If you guys figure it out, you're not done, okay? You've got to stretch it into the future. The reason why I always do that is, what happens if it comes all the way back in there and gets another wick coming out of there? Just like it did here one time, it did it there 2 times, it did it there 3 times, it did it there 4 times. Why would it not do it a 5th time? Right? That's what we do, right? And then when it comes down there, we determine, will it hold, will it do that, or will it close below? Then we just flip that block red, and then maybe it will push down, okay? But it could get you ready for a high probable setup there, okay? And then you want to buy with the buyers. One other quick little tip is, see that yellow line is up there. You can place an alert right up there. I like to go, I'm a 50-50 trader. I'm a psychological trader. I love 50%. I love 50% discounts when I go shopping. I love 50% off. Okay, so 50%. It's not the highest point. It's not the lowest point. It's right in the middle. It's the sweet spot. You know, what was that children's book back in the day? Goldilocks? She goes, tries their beds. She tries the porridge. This one's too hot. This one's too cold. The one in the middle is perfect. This bed is too big. This bed is too small. The medium one is the perfect one, right? That's how I am. You guys can call me Goldilocks with my beautiful, majestic hair. I don't have blonde hair. It is brown, but you guys can call me Goldilocks. I like everything just right in the middle, right? I don't like 10 pancakes. I don't like 5 pancakes. I like to have 7.5 pancakes when I'm eating. Stupid analogies, but markets move on psychological numbers, 50%, okay? Get to know that. Yeah, you don't want to forget my mankini, okay? Yeah, when I wear my mankinis, I don't like them too revealing. I don't like them, you know, I like them just enough, right? If you guys, we got rid of that one thumbnail where I was wearing the Bora mankini. So it was a little bit too revealing for some of you guys. Yeah, I covered it up, Sherry. I covered it up. It was too revealing for some of you guys. So guys, just these candles have already happened, but if you want to go through the motions, cutting them in half, I would cut that one in half. Definitely look at yesterday's volume. Okay, so let's just follow yesterday's volume. Okay, it opened very bullish. Okay, this was coming off of FOMC, so very bullish, bullish, bullish. We created a new Nasdaq all-time high. Tech is going on fire. I told you guys NVIDIA invested, what was it, $5 billion into Intel. That Intel was up 23% yesterday. So, you know, that could be driving the markets. NVIDIA was up 3.5% yesterday on that great news. Tech is unstoppable right now, okay? This is Nasdaq. This whole index is basically tech related. 60% of it is all tech, okay? So if you're following tech, Tech is driving. It hasn't stopped, right? And with the interest rates cuts from FOMC, that could continue to drive prices even higher, okay? You can't fight this. This is an uptrend, strong uptrend. Sellers are getting, they thought this was the day on FOMC that it was going to break down, but it did come down there. But look at all those buyers that loaded it back up and bought, and they redistributed it yesterday, okay? So came all-time high. We closed right there. Really quickly off of yesterday's candle. Can we cut it in half? Right there. That's me cutting it in half and guessing. Again, grab your Fibonacci tool. Let's not guess. I just want to see how correct I am at guessing the halfway point. Was I correct there? I was a little bit off. So let's make it perfect right there. That's 50%. Let's draw our bullish point of control from yesterday's volume right there. Now I can see today's low did not transact in there. They held it. They pushed it above, okay? So stretch that into the future. Stretch it for next week. Place an alert in there if you like for today or tomorrow or next week. My alert is created, okay? Where do we push up? All-time high. We closed right there. Again, points of interest. Closing balance, opening balance, right there, 24,465. We opened. It was initially bearish today. Bearish, 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 bearish. We stopped right there. You can see lowest point of the day. Is it above our green box? Yes, it is. So it's telling me point of control is still intact, holding. Buyers are asking to trade higher. They're protecting this location. They've also asked to trade back up to the opening balance, so they brought it all the way back up. They flipped the candle. Look at I can't even place a high. We're at the highest point right now. 10 minutes to go into Wall Street, and it's a bullish candle. So that's all. That's the distance we have right there to fill to the all-time high. It's only, grab your ruler right there. From purple line to there is 45 pips. Okay. So if we break out, where are we going? Use your psychological levels. Price discovery. All-time high is 24,561. I would go 600. I would have a marker right at 600 because just psychological numbers, 100, 200, 300, 400, 500, 600. Your next one, go to 700, right? I would go to 750, okay? Remember, I always talk about 250, 500, 750. 750 is that one. It's a nice psychological number. So place one either at 700. I would go with 750. Okay, right there. Okay. Again, I want to watch for something in Wall Street, like a kind of fake out where they're protecting the all-time high. So what do I do? From, like where the purple line is, where I just based it off of. Again, because the candle's moving now. We don't have a closing candle. But what I want to do is cut this zone in half, because I want to know if they break it out impulsively and then they stop it right there and bring it back down. I want to know if they're protecting that all-time high. So what you can do is just from the purple line, what I just did, go to the all-time high and right there. Be like right at 50%. I could even draw a little red box right here to show like a hidden block order in the market to see what happens if we get up there and how it transacts. And that's how a hidden block works in the market. Sometimes when you're using those depth of markets, you might not see iceberg orders. They're hidden. They absorb a lot of the market volume without us being able to see it. So that's kind of like my little hidden block in the market, the way how I do it. Okay. And then my final thing that I do is with this current bullish volume, I want to find exactly where 50% of this bullish volume is. How do I find it? Opening balance right now. And where is right there? I know it's fluctuating, it's moving. So there's 50%. Okay. 24,490, 500. Because if it comes all the way back down, I want to see if the buyers are still here holding to bring it back up. If we lose this, it might come back down, okay? So that's what we got going on the daily. 4 hour, really quickly, was all of this consolidating. There's London, came down, back up. We got most of all of this bullish volume is coming from 6 to 10 a.m. That's pre-New York and New York going into Wall Street, closing in 35 minutes, okay? Hourly, you can see how it built off the lowest point of the day. Look at 3 a.m. London. 3 a.m. came up, 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m., 9 a.m., making higher highs and higher lows. We're in an hourly uptrend, but right there could be that big double top, guys. Coming all the way up. There's all-time high territory. Coming back down, neckline. We're coming back up. That's what I'm looking for. Are they going to drop the market there, or is it going to push and squeeze even higher, okay? There's probably a lot of short sellers trying to short the market on a Friday, go into the weekend, and hope for it to dump on Monday, but could continue to squeeze, okay? So really quickly, guys, back to the 5 minutes. This is what we got going on the fives, okay? So still strong move. We could draw a quick little trend line off of the lowest point of the day. It's continuing to hold. Hasn't really broke down yet, okay? SST daily bar indicator, we got it. Opening balance came down low, came back to the opening balance, came to the highest point. We're breaking out right now, you know. I could go right now, okay, to that highest point, but I want to kind of keep it where it was when I was, because it helps me to focus where I had it when we were doing the analysis. And you guys just know that that yellow line right there is kind of representing 50% of that volume when we were measuring it, okay, if it ever comes back down there. EMA 9, we are well above the EMA 9, we're above the 200, it's still bullish. It is screaming that it is overbought right now going into Wall Street in the next 5 minutes, but they could continue to just blow right through here, bring it down. Maybe we look to buy pullbacks. We'll see what happens in Wall Street, okay? Again, it's a Friday, please use proper risk management. There's Nasdaq right there on the right. Here is, wow, US30 is just ignited bars after ignited bar. Ignited bar close at the high, ignited bar close near the high, another ignited bar close near the high. Oh my goodness. Wow. I wish I was in a buy on US30. We're trading in that zone. There's the all-time high. My goodness. Okay, and look at how overbought it is. 82 on the RSI, right? You don't want to get trapped with that RSI indicator because it keeps driving, okay? So those two are side by side. Gold, gold, if you guys are watching it, hopefully you flip this red box green. Okay, see how markets now? Again, that block, you know, it's below us now, but it could be green. But you see, guys, just a lesson for everybody. See when this big bullish candle move? As soon as, look at, they took out just a tiny bit the opening balance. Sometimes that's all it takes for liquidity, is just spiking it like that, and it triggers all of those orders. We won't be looking at gold during Wall Street, but okay, now they pinned it. Okay, they pinned it right now. We have 3 minutes to go into Wall Street market open, so they just pinned it, and now they're bringing it down. So let's see where this body will close. Will it close below here? Will we get a continuation to the downside, or will they just reverse this thing back up? Maybe they're just cooling it off right now just a little bit prior to market open, and they'll continue buying this thing back up. Let's see what's going on in the stock market on some names over here. Oracle is up 1%. Alibaba is up 1%. Alibaba has been on a tear as of late. Crypto rebounded yesterday due to the interest rate cuts. If you guys saw Bitcoin and some other coins, got a good crypto rebound yesterday. Okay, everything is about 1%, 0.5%. Tesla's up 1.3. Apple's up 1.3. What else we got here? Intel was the big news yesterday, getting a $5 billion injection from NVIDIA. Okay, so you see now the volatility. Look at now the range of that candle. Okay, this is not a game. This is now not time to be playing a game 90 seconds prior to market open. Okay, please have proper risk management, guys. Okay, I can't stress that enough. I know some of you guys don't care about your risk management. I'm not your financial advisor. I'm not here to tell you what to do. I'm here to just remind you guys every day. Okay. Scotty, welcome. Thank you for joining us. Scotty, it's been a long time. I hope you're doing well, brother. I know you've been saying 47,000. I know. Guys, if you guys can follow Scotty in the Discord, the man knows. The man knows his levels. He's been reminding us from the lows and the highs for years now. And the funny thing is, Scotty's a 1-minute scalper, and he still targets these high levels. So that's awesome. I'm a scalper myself, and I target big levels myself. It makes trading easier. Okay, guys, here we go. 30 seconds. Please follow your security. If you're following Nasdaq, concentrate on Nasdaq. If you're following US30, follow US30, okay? We don't need to trade right away. I know the markets could be wild as soon as they open up. We can wait for the first 5-minute candle to close. We can wait for 15 minutes, okay? Everyone has a plan. If you're going to go in on the first little bit, just make sure you allocate a certain amount of risk. Here we go. Here's the close. Look at, they're closing it below that daily line. Okay, so it opened bearish, bullish, bearish. Okay, some indecision. First 5 seconds. Can't really judge off of the first 5 seconds. So let's see if they bring it down. TD reached an all-time high at $111.11. That's TD Bank, TD Ameritrade in the US, TD Bank Canada. I trade stock and options through my TD Bank. I do have shares in the company. I do get dividends from them, and they're trading at all-time highs. So that's great for bank holders. Wow, okay. So you see all of that was coming up, bullish, 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 and it takes 10 seconds and they bring it all the way back down. So this is an elevator coming down. Did not even consider that block, so it's coming down. Let's see where they'll close this down. Will it come down, get a wick coming back up, or will this continue pushing down? So that's another, guys, lesson. If you're in buys going into market open, shit like this happens. You could be holding a buy for 1 hour, 2 hours, and Wall Street sometimes takes 20 seconds and it's an elevator coming down, taking everything. That's why I always remind you guys, if you're in a trade going into news, market opens, exchange opens, I always nudge, hint, wink, wink to do something. You know, if you go to a break even, that's fine. It's better going to a break even than going to your stop loss. You should be learning how to scale out some profit. Okay, there's nothing wrong with that. Okay, so the big volume is on US 30. Nasdaq is still moving to the upside. Okay, you could maybe take like an impulse move if you think this shooting star is going to push down on Nasdaq. 3 more minutes to go. I'm going to wait for full closures. Okay, full 5-minute closure. No, James, don't. You're not risking anything else. You're up 3.4% on the week, so I've locked your account. Perfect. There's nothing wrong with that. Perfect. You ended a week positive. Don't give it away. Let's see if we can take that 3.4% next week and maybe make it into 7%. Okay. That's a great trading day. Great trading week. Sorry. It's about 0.7% per day. That's a great, right in the middle, from 0.5 to 1%. You're right in there, 0.75. Perfect. Okay. Yeah, gold is pumping back up. Okay. So you see that RSST sell signal from earlier this morning? Had you not done anything down there where it dropped, 120 pips, see how the market can reverse right back up? That's why, guys, greed will kill you in trading. I don't care what time frame trader you are, greed will kill you. I've seen swing holders holding trades for 6 months, long, and it came in reverse right back to where they entered, and that was 6 months of them holding positions and they never took out any profit. So it doesn't matter whether you're a scalper or you're an intraday trader or a swing trader. The point of trading is to always be taking some money out of the market to compound and accumulate your accounts. Don't get this greed factor in you, because if you get greedy in these markets, it's just a nature of humans. We'll get punished if we're greedy. It's one of the big sins. God told us not to be greedy. That's coming from God, not from me. Okay? It's coming from the higher above, telling us, take some profit out. Stop being greedy. Like if I sold, like I'm telling you guys, honest truth, if I sold, I was just telling you guys, if I was going to go on that, I probably would be out, same with this. That could be a daily goal for someone in that bearish candle, but it could also come all the way back up. So take some money out. I don't know why it's so hard for us. I know why, because you guys want it to sell down to the lowest point of the day and break down there, right? But there's blocks in the market. I'm clearly showing you where there's blocks in the market. Okay, now we're getting into the close. Okay, so just going to kind of get rid of that zone. I'm going to, figure out exactly 50% of this bearish candle. as soon as it closes. Look, I'm already grabbing my Fibonacci from the opening price to the closing price. There it is. Okay, so quickly, my red zone is right there. The point of control of the first 5 minutes of Wall Street is right there. Okay, so if it comes back up, we could possibly look to maybe entertain a sell out of here. If it comes back up, it might not come back up on the next candle. It might take 30 minutes to come back up. Okay, but right now it's pushing down. Now we're engaging in a green block right there. And that's a daily point of interest, that yellow line. Okay, so let's see how strong the selling pressure is when it gets into this green block. Okay, so it tapped the top of the green block. Okay, so it tapped it. This candle could reverse back up and turn bullish. Okay, and then it could trade right to the red line or to the red box. But again, this is Wall Street. So even if you do take like a counter buy back up, you know, like from here to there, that could be about 40 to 50 pips coming right back up. If you're looking to counter buy a move coming back up. Let's see. So it's still holding. Okay, hasn't flipped blue as of yet. Okay, will it come deeper down in here? Again, the yellow line is a better area. That will tell me where bigger buyers are down in there. Okay, so it's coming right into there. Okay, could come right in there and get a wick right at that yellow line. Okay, or it could break right through it and come down to the bottom of the green box. Now it's touching it. Okay, so right in there. 3 more minutes to go. So it just kind of broke through it. Let's see if it gets a wick and will come right back up. Okay, so coming all the way through here. Will it cut right through? Okay, it's holding. Okay, back up. Still holding it. Okay, so it's going up, but let's see one more time. Will it come back down? Okay, so it's holding, holding, holding. Okay, will it come back down? That one more leg down. Okay, so it's coming back down. Coming back down. Coming back down. Okay, still holding, still holding. So there's a lot of accumulation. There's a lot of transactions. This is Wall Street. Okay, good return so far with 2 minutes to go. Good return. Okay, good flip. Okay, coming back down. Okay, coming back down one more time. Just measuring it, coming back down. Has the candle flipped blue? Not yet. With about a minute and a half to go. Okay, so now it's coming right back down. Coming back down in there. Yes, gold is flying, guys. Yep. Yeah, because that block got inverted. They took out the opening day balance and flipped the candle. So get to learn that. You know, study that pattern over the weekend. Study what happened with gold today. You'll learn it. You'll see that pattern repeat itself over and over. Okay, get familiar with it. Okay, now we got 60 more seconds. It's coming back down, deep down into there. Okay. So I'm just looking at spreads. I believe they pinned gold maybe too on the 5 minutes. Yeah, gold came right in there, so maybe they pinned it down, okay? Okay, so now we got 30 seconds to go into the close. So it's still bears are pushing it down into the green zone. You know, we've seen how low it went. Coming back up. Where will it close? If it closes kind of at the top, it might be another bullish candle that opens up to continue to break come back up. Again, it's counter trading, but still could get 10, 20, 30, 40, 50, 60, 70 pips into that red zone if it continues to hold here. Here's the close. Okay, so closed right there. Bearish, watch the flip. Okay, as soon as it flips, okay, going back down, bearish, bearish. It's still got that bearish ignited head. Okay, just flip tiny blue now. Okay, coming back up. I'm going to buy with this, okay? So I'm going to buy to take it back up to that red zone, okay? I'm going to place my stop loss below the green zone, below the wick. And I just want to see if it will return to that red zone. That would be about 50 to 60 pips. If it can build to come back up here on this candle, if it needs to come back down, still giving it room to pick up some more buyers inside there, okay? So I'm going to buy on US30. I know it's a counter scalp to see, you know, if it can just kind of come into here and see what will happen, okay? And my stop loss is just right below the green zone. I'm not going below the daily lowest point of the day, just right there. Okay, to that red line, that pre-existing red line right there, that's 20 pips, right? That's if you're looking to learn how to scalp quickly. That's how you can learn how to scalp quickly in and out for 10, 15, 20 pips. You would go to the 1 minute candles and watch that, okay? Remember, we're looking for the bigger move up there. Okay, so it came right up there, touched that red line. That red line is from a pre-existing area right over here, that double top resistance. So it's still holding. Okay, it's our resistance now coming back down. So we got to watch our opening balance. Okay, the body is, can it still build, or are we going to lose? So we lost our opening balance. So it turns into a shooting star. So now we're going to come either deeper down into here, or we'll hold our higher low. So if it comes back in, we got the green box or the yellow line. See if we can continue to get buyers. Continuing to ask to trade back up here. So now it looks like a little bit of a consolidated flag right through here. Okay, remember it takes just a couple bodies to identify a flag. Okay, so I'm hoping that it will be like a flag in here that continues to build, and buyers can close above these areas to continue to build it, just to kind of retest this block. If it can come back up there, and when it gets up there, I will get out of the way because I know that the sellers are waiting in there. Maybe I want to just buy, exchange my transaction right in there, grab my money and get out, because then it could come back down for another leg down. However, if it's breaking through here, you know, we could maybe change that entire zone up there, but it's nowhere near there yet. The candle is still building. So we got now 2 more minutes to go into the close of the candle. Again, I'd like to see nice bullish volume closing above here to build on the next bar to continue to go up. If the buyers can close it above that red line, that would be even better. Then we can maybe make this resistance our support in our next body. However, it's still strong resistance, still holding it down. "90 seconds to go into the close." Why don't I watch gold after Wall Street? Because there's too much to watch here. Because we're on Nasdaq. We did almost 3 hours of gold. You know, if you guys want, then we don't need to do US30 and Nasdaq. We're gonna stay on gold. We can do a gold call all day. I don't care. It doesn't bother me. I'm trying to show you guys some variety. Okay, so shooting star situation. Again, I got to watch. Remember the previous gold trade we had earlier this morning? Got to watch these locations here. Sometimes, again, I can exit the trade early if I don't like what I see, but I got to watch how it builds here too. So I'm going to see if the buyers can continue to populate in this green zone. Strong selling pressure. There, that's where I want to see if they'll be here at this yellow line, more importantly. Okay, I'll verbally let you guys know as soon as I get stopped out of here. Okay, 10 seconds to go in the close. Can the volume close above the yellow line, or right at that yellow line. If it closes below, one more bear candle is coming in the market. Okay, so close right at it. There's that ignited bar, continue to come down. Again, it's got to be a quick flip and come back up, but it's an ignited bar, so they can hold it down. Okay, so it did flip, but again, we got to drive back into our consolidated area. See if we can continue to build off of that. But when we're building, remember, we're fighting against bearish candles, so they could easily lower high this and push it down. They could easily absorb this. It's a beautiful bullish candle opening right at that daily yellow line. That's great. But, you know, we got to see either bullish closing volume above here, or we got to see like a new higher high, because every time we come up, you know, it's big wicks to fill. Seller could come in, just start offering and bring this back down, right? So it's very, very important. Closing either engulfed above this candle, closing above 50% of that bearish candle. Ultimately, if we can close above where I bought in, that would be even better. Okay, but guys, you know, it's got a lower high for a reason. Okay, it is counter trading, but I'm just testing out how the strength of this green zone. So far, we are holding at the daily point of interest. So it shows buyers are still interested, shows buyers are still there. Okay, so we're getting it right back to entry point here. Again, let's see if we have enough volume in this candle to continue to drive and test this high, maybe make a new higher high. Ultimately, I'm looking for volume to close above all of this structure. I know it's early, there's 3.5 minutes in this candle, there's still a lot of time. And then if I can't get it to close above there, I'd at least like it to close engulfed above this bearish candle. Okay. Sometimes it takes, you got to go candle by candle. Sometimes you're not going to be able to engulf 2 or 3 candles, but you got to at least engulf the preceding one. Okay, every time Nasdaq is coming down, it's getting a higher low wick, higher low wick. So Nasdaq could, you know, maybe try and fill those wicks up there. Okay, we got a good move on US30, but again, half the candle is exhausted now. So we got to reattempt to get up to that red line, create a new higher high with Wall Street volume. It can be done, right? Okay, so again, that's the 20 pips, 25, 30. That's not what we're looking for. We're looking for a bigger move. Okay, good push, guys. That's a great push. Fantastic push. That's your 9 EMA right there. So for you guys that trade that, shit, I can't move this. Okay, that's great push up there. That's 40, 50 pips, guys. Okay, beautiful, beautiful. 50, 60 pips is target up there. Okay, did suffer a little bit of unrealized drawdown, but we held, see that yellow line? That's where that big bullish candle was produced. But now we're trading right back in that red block. So you guys gotta, you know, this was that first red block caused by Wall Street, that big bear candle. So now we're trading right into, that's a target right there. Okay, right into there. That's almost 60 pips, 50 to 60 pips, guys, right at that red line. I'm going to go to a break even now, okay? I don't want no risk in this trade now. I did suffer a little bit of unrealized drawdown, but now I'm at a break even, okay? So we traded right back into that bearish block from Wall Street market open. So, you know, we could transact in there and they could push this thing all the way back down. However, if we do have that bullish momentum that continues to break above here, we may be able to invert this red zone green and get a further push to the previous daily high. Okay, so we're transacting in that block. Okay, so don't be scared to take some money out of there as well, guys, if you like. Otherwise, we got to hold for 30 more seconds and at least we're at a break even. Well, at least I'm at a break even. Okay, so I've eliminated emotions. I'm eliminated, can I lose any money? No. I've just, maybe all I can do is just play with my profits. I'm fine with that, okay? But if we want, oh, okay, we got a good push right into the close. Okay, guys? So that was a great push. That was a great push. Guys, please. Okay, I'm going to take out 80% up there, okay? I'm taking out 80%. That was a fantastic push. Okay, I closed out 80. We got a bullish ignited bar. It didn't close above our zone as of yet, but we got a bullish ignited bar, short wick. So we can continue basically to fill that Wall Street candle. But they could also bring this down, guys. Okay, we did not close above as of yet. Okay, why can't I grab this stupid ruler? I got to get a new ruler, guys. Okay, that's 80 pips right there. Captain, another 50% off. Keep going. Perfect. Okay, so guys, you know, if it comes all the way back up to that yellow target, that's 125 pips up there. If we do get a blue bar closing above here, we'll invert this 5-minute candle green. We could build off of this and maybe come up there. But please, guys, it's a Friday. You know, take some money out of the markets, please. Okay, I'm begging you. Scotty, you got another 400 pounds? My man. Okay, guys. Review lesson time. Yellow line, green zone. Look at where it fell right down to us. You know, it would have been a beautiful. I didn't buy down there. It would have been nice. Discounted buy right at the yellow line. I bought a little higher up there, but still, I relied. Did you see where I placed my stop loss? Just right below the green box. I didn't do anything crazy. My stop loss was not huge. It was just structure, trading structure. Maro, you closed 75% and riding it out. Congrats, bro. I love that. Good job, Maro. Okay, guys. If you can fill all the way, that would be a big target from like yellow tape to yellow tape. When we're talking reading the tape, there's the yellow tape. Big buyers came in. Look at where it sold off. Yellow tape sold off to the yellow tape. Buying tape, back up. Okay, so I got 20% running, guys. That's 90 pips. 100 is right there. 125 is the grand total up there. But please, guys, at least we should be at a break even. That's my job as an educator, is to get us to risk-free trades. Whatever you do with your profit, that's your business. Nasdaq just tapped into the all-time high again, okay? Guys, I can't tell you what to do with your profit, right? I'm just here to educate, entertain. You guys are here to look at my majestic hair. I appreciate that. I know I do have fantastic Goldilocks hair, and I know that's why we get most of the subscribers. It's not for our trading education, it's for our hair. Okay? So guys, hit the likes. You know, remember what I said. If we can get this to 86,000, I don't think we have enough juice today to do it. I was going to come in Monday night after I come back from the States, after that football game, and do a nice Monday night swing trading session with you guys, show you guys how to analyze higher time frame. Maybe we'll do it next week, but I want to hit that 86,000. So that's how I'll come in and do bonus sessions with you guys. Wow. Okay, so gold, beautiful, guys. Today was a great Friday for learning. It was a fantastic day for learning. Okay. Anytime you get like 100 pip trade, I'm talking myself as a scalper. 100 pip banger. I'm normally looking for 20 pips. Like when you hit 100 pip banger, that's for a scalper. I'm talking for me, not for swing traders, but that's perfect. Like I'm going to close my entire trade up there, 100 pips right there. Great. I got filled to the upside. You know, when it moves bullish like that and you close out a trade, I'm putting in a market order and it filled me up higher than what I was expecting. So that's slippage in a good way. When you close a trade and it slips you up with that bullish volume, sometimes you get a better fill and it's more money in your pocket. But I'm closed. I'm out of this trade. I want to eat some pancakes. I want to enjoy my Friday. You know, I want to also rest and relax a little bit. I got to leave tomorrow morning early for the States for the football game, Chicago Bears against Dallas Cowboys. I'll be in Chicago. You'll probably see me gain about 30 pounds over the weekend because I'm going to be eating traditional deep dish pizza. New all-time high breakout, just that little squeeze of that liquidity, and look at they pinned it, and this could be a bearish candle coming right back down. Guys, that's why I closed out 100 pips, psychological number. Get your money, get out. Dale, we'll see, man. We got to beat the Bears. If we lose to the Bears, then the Dallas Cowboys have big issues. But they can beat the Bears. Scotty, I know you had 2 losses today. You don't do Reddits against your religion. I know I'm part of that religion too. I'm part of that religion too. I have a hard time ending days on a negative. I'll figure a way. I'll grind it out, guys. You guys don't know who you're trading with. I'll figure out a way. If I ever go in drawdown, I figure out a way how to come back. It's just, I think I'm stubborn like that, you know, but I do it with proper risk management. I do it with selected zones. I do it with alerts. I don't force trades. I allow it to come back to me. Okay, but there's always a will and a way, guys. Don't ever give up. If you got some losses, you have to go back right away, excuse me, and learn from them. You have to, okay? Red box to green. Did Nasdaq close above? Yes. So just go through these motions. I know it seems stupid and repetitive, but it works, okay? It works, believe me. Because if it comes back down in here, those buyers could be at that yellow line, take it back up. If the buyers are not there, the sellers close it below there, you flip that, and then you might have a sell block to take you back down to here, take you back down to there. Just play it like a game, guys. This is a video game where we can make some good money. You know, if you play video games, this is what this is. It's just another form of a video game, which can pay our bills and get us financially free. So I hope everyone had some fun today. Guys, we had a blog. I know it was when we started. I know some of you guys are not interested in this blog, but it's very important to me. That's why I missed yesterday. I had massive migraines the last couple days, and I couldn't focus. I couldn't even come in here even to talk to you guys, even let alone look at a computer. So this is really important, guys. Read this over on the weekend. The importance of taking breaks. Time off can benefit your health and performance. Go through this, guys. And then if you're feeling sick, tired, you're not rested, you got migraine headaches, probably not a good idea to trade the markets. You'll probably compound that problem. Not only that, are you going to compound your headache, but you're also going to maybe compound some losses, and know to walk away from the markets. They're open the next day. They're open next week. They're always open, okay? So do you guys, are you guys doing anything for the weekend? Anyone want to share anything exciting? You know, even spending time with the family and relaxing, that's exciting to me. I love that too. You don't always have to go all out. It doesn't always have to be parties and Scotty, steak night with the boys tonight. Can I come, Scotty? Can I be invited with the boys? I love steak. I'm going to visit you, brother, in UK. I'm going to come. Next year, I'm going back to Europe. I'll come to London for a week prior to going to Albania, and then I'm going to come see you. T-bones tonight. Nice. Omar, you're going fishing? Good. We went fishing too today. We caught some big fish. Hopefully you catch some too. Okay? Now you understand my fishing analogy. Okay? Moshe, drink more water. If you smoke blunts like me, I probably do. That's why I got my Gatorade right here, my G0 Blue. Pizzeria Uno, yep. Tony, I'll be checking that out. But my nephews want to go to Giordano's. We'll check that out, but we'll get a couple pizza joints. Thank you, Tony. Lisa, can I send the charts? I haven't done it in a long time, Lisa, but let me see. Just go over here, copy. You want me to just copy the link? I can do that. It's been a while, Lisa. Let's see. I'll post it in the Zoom for you guys. Tell me if it works, Lisa. Yeah, you reminded me of this. If you guys always want that when I finish my charts, yeah. Okay, click on it, Lisa. Tell me if it's good. And then, yeah, guys, reminder to you guys on Zoom. After I'm done my top-down analysis, I can give you guys the charts. We used to do that. Holy Omar, wow. Look at the size of that fish. Oh, my goodness. Let me show everyone. Guys, do you guys see that fish right there? Omar, holy, bro. That's a big one. Wow. How long did it take you to reel that guy in? Is it a dolphin? No, man. Okay, it's good? Awesome. Okay, about 20, 30 minutes. Good workout. That's a good workout. Guys, that's why, don't always get greedy in the markets. 100 pips is 100 pips. Daily goal for some traders. Get your money and get out. And let's repeat this over and over and over. Make this job very repetitive. Make it very boring. Once your job is very boring, you know you're doing something good. See, now just part of the job. Did it close below there? Yes, it did. Invert that zone. Now you got maybe a seller's block. So this could come all the way right back down to my entry. But thank goodness I closed out 80% and the remaining 20% there. That's why this used to demoralize me every single day as a trader. I used to take beautiful trades, and then I wanted more, I wanted more, I wanted more. The market would come right back down right there, what it's going to do. But now I have the last laugh in the market because I took all of my money up here, right? So I'm out of it. So right there, it would have been a break-even trade now. So that's why, guys, it's very important to know your take profits, your distance when you're trading. When you're driving from point A to point B, make trading very easy, guys. Have a destination when you're trading. When you get into a buy, where's your exit criteria? When you sell, where's your exit criteria? Okay, that's how you will make trading that much easier for yourself. And stop confusing yourself. It's not that difficult, guys. And just learn to take money out of the markets. We sit in front of computers for 2, 3, 4, 5, 6, 8 hours a day, and then if you're in profit and you're not taking anything out, then you got nothing to show for. All you're going to get is headaches, migraines. You're going to get sick of staring at computers. At least when we're doing it, get paid to do it. Okay, that's the name of this game. Please learn it. And don't worry about what would have happened or what should have happened after the fact. See, yes, I took out my money and it could have been going back up. That's, again, anyone can say that. We can say that all day for every single trade. I bought Bitcoin when it was a couple dollars, guys, okay? I bought Bitcoin back in 2010 when it was a couple dollars, right? It was on a lot of Chinese exchanges and I lost it all, right? So I would be a multi-billionaire had I still held it, okay? Or if I wasn't scammed out of it, okay? I've been part of Bitcoin in the early days. What would have happened, should have happened. I don't look at those things, okay? I look at how I'm trading today, where it's going to go in the next 5 minutes, make my money and get out of these markets. Scotty used to buy your weed off the dark web at BTC on the Silk Road. Oh, man. That brings back memories, man. You make me laugh, Scotty. I have to smoke a blunt. I gotta smoke a blunt with you, man. I can't wait. You make me laugh, man. But guys, I appreciate you guys. I'm happy to be back. I feel better. So guys, for Monday, I put it out there if we can get to 86,000. But if I come back Monday, everything is healthy, everything is good. My flight comes in. I'll come back on a Monday with all of us. It will be Zoom and YouTube. What we'll do is we'll do something that we haven't done in a while. I want to see how you guys enjoy it. We'll do weekly analysis on gold, US30 and Nasdaq. We'll start it with those 3 securities, but we'll go monthly, weekly, daily, and we'll stay on the 4 hours. And then we'll watch that throughout the week, how it swing trades. We might find some good blocks for swing traders, but that will be Monday night, guys. So I appreciate you guys. If you guys can leave us a like, join the team, guys. Don't forget, guys, our signals are really good signals out here. Trade ideas help you with your trading. If you want to be part of this, you can be part of everything. All of the education we do here, myself, Dave, the Discord educators we have as well, all of our admins, Scotty, Forex Borex, Sergio is in there, Serge is in there, everyone is in there, Carlos is in there, Noor is in there. We've got a lot. I can't list everyone's names because there's so many to list, but Rob Mack, everyone is helping out in their specific areas. We've got commodities traders, index traders, Forex traders. Everyone does their thing, guys. It'd be great to have you part of this with us. If you can't, no worries. That's why stay on YouTube with us. All YouTube is a like and a subscribe. But we also have private groups that we do here, more for private education and things like that. I'm going to get started with more private education like we used to, and just keep learning, guys. Free blog for you guys. I'll do, what was the blog I was going to do? Quad witching. Yeah, so I'll do a blog later today and I'll upload it prior to leaving to the States, and you guys can look into that as well, okay? But it's great, guys. So thank you guys, everything. I appreciate each individual, everyone on YouTube. You guys are a big part of this. We do appreciate you guys, as well as everyone in Zoom. We love you guys too. You know, you get to know Dave and I just a little bit more than people on YouTube. So we're here with you guys for life, okay? As long as Ron and Dave are still kicking around, that's why we have a lifetime program. We attest to that. We don't just have a lifetime program and then we disappear overnight. We've been here for 6 years. We're not going anywhere. As long as we're healthy, happy, God willing, we're here with you guys every single day, okay? Let's just continue learning. Please learn. Education is powerful. Knowledge is power. It can get you where you want to go in life. You know, not just learning with how to trade a candlestick, but what to do with your profits and how to invest them in passive income so you can continue to grow your portfolio for years to come, not just for yourself, but for your kids, for your future generations, right? So you guys are doing great, guys. Everyone's doing fantastic. I know some of you guys are still learning from mistakes. That's progress. That's what it takes to be a trader, guys. So thank you guys so much. Join our free Telegram channel. It's pinned at the top of the YouTube. If you haven't already, it's there. It's available for everyone, okay? But we do appreciate you guys. What do we got over here? Sorry, I just seen this posted. Exit is that what I just passed phase 1 in my funded account due to US30 trade. Thanks, Angro. Congratulations, 4T. Trade to the top. Congrats. Greetings from Austria. Thank you. Vienna is beautiful. I go to Vienna. I fly into Vienna all the time. Beautiful. Austria is a very beautiful country. If you haven't visited Austria, wow, it's gorgeous country. Beautiful. Thank you guys so much. I appreciate the support, guys. Thank you guys. Again, have a blessed Friday. Juma Mubarak to everybody. Enjoy your weekend. I'll be in the States for the weekend. I'll be back Monday evening. If I feel good, we'll get a Monday night session, but we'll resume Tuesday morning, 6 a.m. Eastern. Okay, guys? So thank you guys so much. I appreciate all of you guys. Have a great weekend. Enjoy yourselves, guys. And we'll see you guys Monday night or for sure Tuesday morning. Have a great day, guys. And trade smart on the rest of the Friday, okay? Thank you guys so much. Pleasure. Have a great day, everyone.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.